Good morning, everyone. Today is Friday, November 18, and 8 minutes after 9 a.m. Eastern Time. This is Rose. All right, welcome. I just want to go over quickly the Friday news schedule. All right, so we have a Fed member begin her speech around 8:40 a.m. Eastern Time, and just give me a second here, everyone. And we have 10 o'clock, several news coming in, but nothing really important other than the existing home sales at 10 o'clock. So you guys need to pay attention to that. And then some e-commerce retail sales, bunch of other things, but we don't really need to worry about the rest of the afternoon. Seems like it's going to be just a regular Friday. Just give me a second, please. All right, this is the 1 hour chart. You can see that we had this support for a while, and then I said that we're distributing, and we're probably we were resting at that support at that time, above the support. And I said, look for that support to get broken. And I had this area, which we found, 39.1950. And I said, that's what we're going to be testing once we start to move underneath that support, which we did. And then we bounced from there. And yesterday, we went down and sideways a little bit, and then we had a breakout. So market made a bull flag and went back to that support. Support did not act as resistance, and now we're back above it. So we're back inside a balance zone. What you see over there is the 1 hour balance zone. The market went back in. Generally, 50% of this area can act as resistance. So we might be finding some resistance, but I think the price is trying to go higher. So we have amount of space to the downside breakout. I projected to the upside. Or you could say, well, this was the breakout, okay? And basically, we did sell. If you take these lows, okay, market actually did come down. So I don't know if we're going to be able to actually project this upside, because this already kind of did the swing to the upside. This range expanded to the upside and then expanded to the downside. So the cycle might have been completed, and we are right at the 50% of this balance zone, okay, or area of interest, trading range, and the market is deciding what to do here. Now, if this acts as resistance, we could still come down, because market is looking for basically a head and shoulders breakout, come back, and if it really wants to sell, we could end up finding ourselves here. But I think the market is trying to go higher because of what I saw on the Globex chart. But the Globex range is pretty large, and we have a spike pullback and channel. So we might be trying to come down here. This is where we might end up actually bouncing bullish. Be careful here, okay? So if we do bounce here and go higher, we're going to try to make a new Globex high, and this is the area I'm interested in for bulls to test, and then the bears waiting there. However, if we do break this area, can you guys actually see my chart? I never checked, but I know you guys can hear me. So if you do break this area, then we're going to continue to come down to the spike pullback channel. The channel is like this. Okay. So we could end up coming down all the way here before bouncing. We might even have a break of this trend line, and then fake breakout and go right back up. Okay. So let's talk about that. So right now we're coming down, looks like here, okay? But I'm more interested in what will happen at the channel lows, although I don't even know if I actually drew this channel right. You can take all of that, and this would be a tighter channel. So you could see how it's actually coming together right there. Okay, so bears can still push this down further, a little bit more at least. See if we can actually test 39.85 to 39.84 area. But if we do bounce, because price is trying to make a new Globex high, or to break above the Globex high and continue to go higher. So we still have some time here before the market open. But I'm also watching bears because bears, if they want to swing this down, we're going to end up finding ourselves all the way down at the Globex low. But first, this area is going to hold. We're going to bounce here violently if we do come down. But the swing bears want to take out that trend line. So we'll see. The market hasn't opened yet. Right now we've been going up and up and up. Here, let me show you. So we were down, which I'm going to go through the yesterday's bar by bar price action reading. But after hours, we came down. We made a wedge, double bottom, bull flag, and we broke out. So you can see that there is some kind of a measured move that they may not have met. This one they did. Actually, they didn't even meet that target yet. But this is what I'm interested. So bull's still trying to push towards that level, and this area could bounce, okay, at the open rather than sell. Now, if they do sell, then that's fine. This spike pullback channel, the channel lows, basically where we're going to probably trap these bears, or at least we will try. So we're heading right to that trend lines, two trend lines. And then we'll see what the bulls will do over there. Okay. So yesterday we had a large gap down, but I want to go back a little bit, and this is something that people always forget to do. You see this area right here? This area is very important. This also opened up the month, okay? And this green line, you see there is a trading range here. We came down to literally the middle of that trading range. There's a small one, there's one here. So that right there is a 50%. You see, right smack in the middle? That's an area of interest the market wants to test because it's a balance area. Before it broke out of there, it spent some time there. So that area is where market agreed that it's a good price. And the market actually did stay there a little bit. You could see it spent some time there. It's in the morning, and it really, just went sideways a little bit. I don't care if you call it an expanding triangle, apex is holding, or you could call it a triangle. Okay, so or diamond. Whatever you call it, this area we're taking our time with. And market, had first bar with an upper doji, pretty strong doji, not as much, as big as the body itself, but body closed above its midpoint, so that makes it a bullish bar. But it didn't get a continuation second bull bar. And then and the first two bars were overlapping. When I see that, I tend to wait about 6 bars before I see any kind of direction to up or down. Now, you can also say this is a leg 1, pullback leg 2, that's fine, but where are you going to buy? So you're going to have to wait for this bar. If you do buy above that bar with a stop order, you're looking for move back to the EMA, and the EMA was around there at that time, major gap up. So what you're seeing here is a major, big sell pressure, by bears. So as price goes up, it's going to get smacked down because there's sell orders waiting above. So you can see that leg 1, leg 2, sell orders, and you have a 2-bar reversal, bar 5, they're going to be sellers underneath that. They sell, and I said in the Discord, Tim was on yesterday, and I think he said that too. We're gonna test now below bar 1. So we all said the same thing, and we did test below bar 1, and the buyers were there. So now we have a trading range. We have another 2-bar reversal, 6 and 7, but it's a 2-bar, so you know somewhere here above that bar or that bar, sellers are waiting. Now, if you do sell, okay, you're in a trading range, you're selling the 50% of your trading range, you still have to scalp. So because it's a limit order market, anytime the bear machines see a bull close, they're going to sell that close. There are sellers waiting also there, okay? So, and the bears who got stuck here, they're going to sell about 5 points above, okay? Or I don't know where that 5 points is. I did not measure, but let me measure. So if you sold here, okay, or you sold underneath, that's 5 points, right? So they sold there, and most likely they're going to sell about 10 points. So here we go. That's 9, 10 points, right? And they sold, they couldn't even get out, okay? But those who sold at the high of bar 6 were able to get out, okay? So, or if you see bears are not able to get out, even if they sell the 10 point above, they're going to have to sell up here. So what you do is you measure to see if they bought here. That's say this is high 1, high 2, or high 1, high 2, right? The 5 point there, 10 point there. So somewhere around 10 point, as these bulls are taking profit, bears are going to start selling. It happens to be also above this leg high. Okay, so this is a trading range right here. Bar 1 to all the way to bar 10. So above this trading range, there are sellers, 2 to 5 points above waiting. So if these bulls will take 5 point, 10 point, maybe even 15 point profit, there will be sellers waiting to sell. So you see they already started the sell with 11, but 11 is not really the sell, it's actually to take profit. Bears are looking to see how bar 11 is going to close. It closes on its low, but it's a doji, doesn't matter. But look where it opened. Profit taking immediately began as this huge bar 10 bar, which is a breakout bar, is not getting continuation. It gets a pullback, and the pullback bar actually started to print way below where the bull bar closed. So that, to me, is a major profit taken, okay, by bulls. Now, bears see that. Now they're getting excited about, let's sell. Let's sell above maybe 10 points, because if they're stuck here, they're going to have to break even somewhere here. Okay, so that means they need to sell up here to get a better entry, okay, average entry price. So as they sell with that contract, they make money. And then as it goes down, they make money with that contract. So you could see, okay, you got the sell signal and a trigger bar 13. So now they're going to sell underneath that bar. Or you see a limit order, 1, 2, 3, 4 bar limit order. Some will sell, okay, at the 50% of that strong bear bar, but they will sell. So they sold. Now we come back, but it's also because we gap down so much at the open. You have 1 pullback, 2 pullback, 3 wedge, or you could say, hey, we have a failed breakout double bottom. Now we have a failed breakout double top. So to me, this is some kind of a trading range or expanding triangle, which is a trading range on its own. What does it do? If they do sell, we're going to come down and test these lows, and that's exactly what they did. So now we have another breakout failure, and we didn't even break out, to be honest with you. We couldn't even come down with a bar all the way to these lows, but we did test it. So this is a trading range, okay? So now I'm looking for, okay, right here, we've got failed breakout, failed breakout, failed breakout, double bottom, double top. All right, so what I'm looking for is now some kind of a measured move. If the bears are going to take out this low, I'm going to look for that measured move down. But if this is a trading range and there are buyers waiting there, Then I'm going to look for price to get back up, okay, and squeeze out these bears, and then break out, and I'm going to look for a measured move to the upside. So here we go. We did have a 20 bar, okay, gapping to the EMA, okay, so you can see right there. So you have to always expect some kind of sellers there, but you need to see, bear bars taking out these, doji lows, or even you want to see a bear bars taking out that low, okay, if you really want to see, selling at the EMA. Now, what did you get here? Bunch of 4 dojis side by side, and only one of them, bar 28, is a bear bar. Where is the second bear bar? Right then and there, I decided, nope, they're not going to be able to sell this, and this is going to end up being a bear squeeze, and short squeeze. So we're squeezing out the bears from this trading range, okay, and most likely we're going to double this range high to the upside. So you get a huge breakout with bar 30, right? You can also say, I'm going to measure from there. I'm going to put my stop here. We got a really nice move up, okay? And what you can do, you see this bar like this, it's probably going to want to get continuation. So what you want to do, you can also, I don't like to do the 2-to-1 measured moves, but you can. You can think of it as a risk reward, but you need to put your stop here, okay, not there, because this is no longer a measured move. This is now a risk reward move that you're trying to possibly get, okay, 2-to-1 to the upside. Now look at that. It went, it didn't even go one tick, it just hit 2-to-1 right there. Perfect. So, right, so you don't even have to do it that way. You can also say, well, what if I just enter with the second entry? Maybe from these highs, I've got a first entry, which is terrible, and then you get a second entry right here. So if you entered here, your stop, would your stop go here? No. Your stop needs to go here or wider. Okay, so you can say I want to take 5 points, so 13.75, your 5 point be around right here, right? So that's your 1-to-1. That's your 2-to-1. That's your 3-to-1, right? Did we get a 3-to-1? No. But what if you, once we have, now that's 3-to-1. However, your stop is here. When the market makes a new high and makes a new higher low, what do? You can actually lower that, and this is how I do it. You can put your stop there, okay? Now go for 4-to-1 and look at it. That's your 4-to-1 risk reward. Beautiful. Absolutely beautiful. So we are also getting closer to certain magnets. What are those? Well, we do have a gap here. It's obvious that the market wants to close this gap, but first they need to test the bar 70, but testing is not enough to close the gap. It actually needs to overlap a body. Do you see any body overlap? No. So is the gap open? The bear gap? Yes. So when I see that, I start to look for targets. Bulls got their 4-to-1 target. That was beautiful. So what else am I looking for? I'm looking for a wedge for some kind of maybe a major trend reversal if I can spot one, right? So bulls right here had a spike, pullback, and the pullback happens to be a wedge bull flag. Beautiful buy signal. You can buy right above that bar 38, okay? And then you would hold it until 42, all the way to 48 or 130, or maybe even 50 tops, because somewhere around between bar 48 and bar 50, I am looking for a reversal or some kind of a swing that will last minimum 12 bars, average 18 bars, okay? If you want to learn about this, go take a look at the weekend study charts for swing setups I post under two different Discords, but if you want to find one that's on the BTC, go to, where do I post them? Yeah, ES Analysis Read Only channel. Okay, so I've been posting for 3 weekends now. So for the entire week, for 5 days, right? So there should be about 15 charts there that you can study where those are. So train your eye for those swing setup, because all it takes is a one trade to make your living a day. Okay, so here we go. So we go up, we got a wedge. Because we have a huge breakout, the count will begin here. So that's your 1, that's your 2, and that's your 3. What do we need for a major trend reversal? That's not enough. We need a double top, higher high, or double top, lower high. I like the lower high better. And then double top neckline. So I know we're going to have some kind of a trading range there. But if the bears actually break that neckline, bar 49, okay, low, market just open, okay, then I'm going to be looking for a bear flag. Bear flag needs a lower high. Bar 55, 56 is the lower high. I'm looking to put my stop and run. Now I said around bar 48 and 50, I'm looking for minimum 12, average 16 to 18 bars, more if it's better. I mean, better if it's more. Sorry about that. So count it, right? So it started here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, and 22 bar swing. What else do you want? I mean, that was beautiful. I was swinging that down. That was just absolutely beautiful. And so here is your wedge, double top, and a lower high, or either that or that. So if you sell it, your stop goes here. And if we take out that low and close a bear bar, move that stop here. If we take out that low and close a bear bar, move that stop to here. And I keep swinging. If you make a new low, okay, below this and put a print a bar. Do we have a bar? I don't know. Let's take a look. Do we have a bar that closed below that low of 59? No, I don't. Not all the way to 68. I don't. So can I move that stop from here to there? No. If I do put it up here above 60, I have a chance. And you would get a heart attack if you do that. Look at that. Look, if you move that stop from here to here, you're going to be so irked and upset about this, you're probably going to voluntarily click close, and then the market will go down and you're going to be upset about it. So when people ask me questions, or Al or Brad or Tim or anybody else, okay, that how do I stay in my swing longer, or how do I expand my profit taken? How do I trail? I am so scared to get out of my position. They kick me out. No. Nobody kicks you out. You get yourself kicked out. It's because you're not following a very basic swing, okay, rule. If market does not print a bear bar below the prior lows, okay, or any bar below it, that means you don't have a solid, okay, a major lower high to trail your stop. Same for the bulls. If the market can make a higher low, but if it doesn't go above the prior high with a close of a strong bull bar, okay, there is that higher low is not major, it's minor. You cannot put your stop under it. It'll become a skunk stop, and market knows that your stops are there. They're going to first come and get those stops before swinging higher, and you're going to be very upset. And that's how you manage it. So hopefully that helps you. And I know it takes a long time because you're NC, you want to take, profit, then pay yourself as we make new lows, okay, or at those lows, because we could come down here and go right back up. But if you pay yourself, even if this goes up, you're still in the winning, right? You don't know if market is going to keep going down for more than 12 bars in that swing. So, but we did. So good for the bears. And when I see a market structure, double top, neckline taken out, we go back up. That's my first, okay, bear flag. Then we come down. I'm looking for a second bear flag. Double top, neckline. First bear flag. Then I'm looking for a second bear flag. second. Then I'm looking for a third bear flag. Where is it? Where is it? It's supposed to do this. But look what happened. That's a V-shaped recovery. You get a V-shaped recovery like this, okay? That means we're going right back up here. So get out, don't expect the flag. That means we're going to go up here. There's liquidity there. Or we're going to go right back to 54 to this area. Okay? So, but minimum 2 flags, to me, that's great. First flag, second flag, or you could say second flag, because we made a new low, now a third flag. So there's a hidden third flag there. So market did make flags, 3 flags. 4 better if it's a really strong swing, but then we're hitting this, okay, SR Philip line, which is breakout test. Breakout, we dipped below a little bit because there is a buy zone here, aka demand zone, okay, that bar 28, all the way to low to here. We test inside, beautiful buy signal bar. Now that's the pin bar I'm looking for. I only respect the pin bars if they are at some kind of a demand support or buy zone. And that bar 72 is the one that I'm looking for. Okay, you can buy 1 tick above it. Your stop goes underneath bar 29. And then you could go for a 1-to-1, 2-to-1. You can trail that stop underneath 78. Okay, if it's still going higher. So we ran out of time and the market closed. Now, there was one question I want to go through. I don't even know if I actually answered it. Dargerak. So he said, I'm confused. Wasn't 35 a second entry sell? And wasn't 38 kind of a big to buy bear micro? Okay, so what's so obvious to you here? I don't want to turn this whole session into a teaching session, but it's Friday. So Friday, TGI Friday, we're having fun here, right? I'll go back to the price action in a minute. But let me do something here. Just want to keep an eye. Okay, so what is so obvious here? The bull surprise bar. Yeah, it's not a surprise bar, it's a breakout bar. But you can call it a surprise bar, that's fine. It's breaking out. So that means we have a spike. What does a spike need most of the time if it's a bull spike? A channel. What is a channel? Bull flag. So bull flags come in many different shapes, right? Spike, pullback, and channel is this kind of a bull flag, right? Depending on where the wind is coming. And the next one is a bull flat. So it's a flat channel. You're looking for a double bottom and go. What is the third one? The actual flag. You're looking for a wedge, 3 push down, right? And what's the fourth one, which I added recently? I generally use the 3, okay? That is actually a expanding triangle or megaphone, right? We go here, up, come down, go up, maybe come down, and then finally get above that apex and go up. So that's actually this one. It's the variation of this one because your apex is here. We can breach below that, test that pullback, get back up apex and that. So this is actually 1A, 1B, but however you look at it, doesn't matter. So which one is the one that we have close to? That's this one, the third one, actual flag. So you have this. Are you going to sell bar 32? For one, there are probably buyers waiting underneath. You got to break out bar 30, and you got to follow through 31. Don't you think the bulls are waiting underneath 31? And most likely they will start to buy underneath 32. Now look, bar 33 did not even test the bar 32 low. But so if they're still selling, it's because they are in a counter trend, 2-legged move. The bears are trying to make a 2-legged counter trend move. So the bar 34 not only tests the bar 32 low, they started to buy, and then also testing the bar 31 low. They're buying. So but you still have to need to wait for a second leg down. That could be a trap with micro double bottom with 34, but this bar tried to trap, but it closed bearish. So chances are we're still in the second leg. So if you are selling, okay, you have to think of how far can I sell this? where can this actually fail? You got a huge gap here. At this point, your bull gap is from here to here, okay? Or you can even say, this is the bull gap, okay? I've got a huge bull gap that I'm trying to sell into it. Is this wise? No, it's not. Because all you're going to get is probably down, 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 and maybe a micro double bottom. Buyers are actually waiting right there. And they get a really nice signal bar. They're going to lower that buy stop order from there to there. And they're going to get filled, grab a 1 point, and they're going to go higher while you're still trying to sell into the EMA. What's going on with my screen? What's wrong? I'm sorry, something's going on. You guys cannot see my screen? I'm trying to explain, but I don't know. Okay, so that's the whole thing. You just cannot sell against this gap because there are buy orders are stacked and heavy and waiting. So all you will get probably either a second leg trap, micro double bottom, or even if the second leg goes, okay, it's just going to go higher. So what you can also do, measure the spike, okay, like that, and see where the pullback is. Look at this. We couldn't even get down to the 66% or the 50%. Or say, I'm going to measure this leg, breakout leg, okay, and I'm going to look for a pullback. You can take the whole thing if you like, okay. Look at the pullback. We breached below the pullback with bar 37, but we never gotten a follow through or second consecutive bear bar closing, and you get the bar 38. So here's your high 1, 34, and here's your high 2, actual signal bar 38. You just buy that. It has a higher low. That right there is slingshot, what I call it. Breakout, pullback, slingshot. That's a swing setup. Okay, so I'm going to go back now. So hopefully that helps you. So we gap up. Okay, we're above yesterday's high. We just tested above the open of the week, but the bar 1 is a strong bear bar. Bar 2 is a follow through bear bar. So what do we got here? Look what happened here. We broke this channel. Where are we coming down? What is this? I just talked about this being a variation of a bull flag spike, pullback, and channel. So if you have a wider channel, okay, that's the low of your channel, okay? So if you actually, okay, we just broke that. It's because market is trying to come down into this balance zone. There's a little trading range there. Market paused there, went up, and then paused, and then just went right back up. So that's the area, either the high of that bear bar or the middle of that area. Market is trying to test because they're in search of bulls. They're looking for buyers. If no buyers, we can actually come down and test this bull bar's low before bouncing, okay? So we broke this. That's fine. I warned you about that. Now, I said be careful. Bears could start to swing this, but that doesn't mean they're going to sell all the way down here. Now, that's a surprise bar, but still, it's just looking for support, and that support is right around here. Now, if we do break that, then we're coming down here, which I said earlier. That's where either we're going to bounce there or we're going to bounce there briefly. But because the selling is strong, we're probably going to make a bear flag, come back and another bear flag. We can end up coming down here, make double bottom, then swing back up again. So I warned you about this. Okay, you have a micro double top, I said, at the Globex high. I don't know if we're going to be able to break above the Globex high. If we do, that's fine. But if we can't, you know, you just cannot force the trade. So, and you just opened up in the nosebleeds. It's just extremely high. When you're gapping up and you're above yesterday's high, and the yesterday's high was made with a strong bull move, okay? So that means maybe we're pushing too high to actually trap the bulls. Where would the bulls get trapped? Some kind of liquidity zone. Liquidity zones, you have to look left. You're looking for some kind of double top area, or the area where the price actually broke down and sold where the stops would put in. So if anybody sold this and they're still holding on to their short positions, those are strong bears. Where are their stops? Those are institutional traders. Other institutional traders look for those liquidity zones because they know their stops are here, here. So they want to go back up there, trap, run those stops before trying to, get an impulsive move down. Impulsive moves up or down are not made easily. A lot of traders, institutional traders, need to get upset, okay, in order to change teams. So if you're a seller, you're going to become a buyer, you have to change teams. So in order to do that, they need to shake up the order, flow. And that right there is a trap. So we have two bear bars, both of them close on their lows, and market is trying to get some kind of a trend from the open. So we need some kind of a bear flag here, if they can, or we're going to keep going back up, okay, and we're going to get a double top, and then we might sell. So two bear bars, strong, one bull bar, a doji. There are probably sellers about that doji and the open of bar 2 possibly, so they might try to sell and get another leg down. Or what you can do is you can take 20 bars and find your average price, which is right around high of yesterday, this line, okay? Now, if we do get a big down and suddenly a big up, that's a trading range behavior, right? So, but we don't have that big up yet. So I'm also thinking ahead, what if the bears cannot get their second leg down and we end up getting a big up? That puts us in a trading range. Well, you do have move, down, up, maybe down. We could make a double bottom and then go up, and that's a variation of flag, right? So I have to think of that as well. So I'm looking to see if there are any sellers here, okay? And if I'm right, and market is in a trend from the open and they want to come down here, then they're going to have to close either bar 4 or bar 5 strongly bearish to continue down into the average price, which is high minimum at testing of high of yesterday, and then coming down to the average price line. And then you have also EMA average price. I think bears have a potential of testing the bar 81 body. But if they cannot close this bar bearish, then that's going to tell me, okay, what's going on here? Are we going to go back up and test the bar too high and get a double top there and then sell? Sure. I'll wait for that. Right now, I don't have. I have a scenario. I'm trying to visualize it, okay? All the scenarios. I'm trying to act like a machine. What are machines? If this happens, this will happen. If that happens, that will happen. Machines follow a processes, right? Algorithm. So that is written for them. I'm not a machine, so I have all sorts of scenarios going on, around in my head, because I have to be prepared for those. I have a small account. I don't have a big account. I don't work for a hedge fund that a machine is allocated for $1 million to trade. I don't have that. So I have to be, do my due diligence and think for the worst, hope for the best. So here we go. If they do close that bar, then I'm going to check a box saying that this is the second leg, especially if they take out that bar 3 low. That's going to be the second leg down. Now, am I behind? I haven't checked it. Nope. My data connection is doing fine. You just scared me there, Maverick. We're going to bounce shortly. But I like to see a little bit more continuation if they can make it all the way down here. So that is 39.60. High of yesterday, we might test. And bar 80 high and bar 81 we might test. This is a breakout test area. So we're going to probably push a little bit further. and grab that. $66.75, $66.50, maybe $65. There might be pullback sellers here. I said we're going to bounce a little bit, so that bar is bouncing. But if it closes bearish, that's a breakout follow through. Okay. If bar 5 closes bearish, look where we are. I said we're going to test this, and we might bounce here a little bit. But I think the bears want to come down and test it, this gold line, which is Asia high. So let's see if there are limit order sellers here at 39.70. They might sell at about 6.5 points down, or 6 points average. So 70, 60, so that would be 64. Somewhere around 65, 64, we might sell into 39, 65, 64. Just doing a quick math. As ATR changes, I will change my target with it. But right now it says I can grab 6 or 5 points easily from here. Why is that? Look at bar 4 body. Bar 4 body broke down a bull bar's low. Okay, so that is a breakout point. We're testing that. Now, they already started to sell right there, and that's around 70.25.70. Now, ATR is actually, I'm sorry, I was looking at the ETA chart. This is, ATR is a lot higher, 875. So it could sell, I'm going to say average 8 points. And that brings us to high of yesterday. But if the ATR goes down, I'm going to adjust that. So let's see if they can make it. Now, if this bar continues to go higher, that means those sellers are, observed, and they may not be able to sell. It's because you have leg 1 pullback, leg 2, but we need a leg 3 down, right? So this is a, spike pullback channel. Could come here and then go back up and then sell again. So they're processing those orders a little bit above 70, 39.70, and a little bit below. If they can close this bar on its low, there's still 2 minutes. They can continue to go down. But if suddenly this bar starts to close on its high, many bears might look to sell a little bit higher to get a break even. But I'm going to sit here and wait, because I think they're okay. So ATR is 9 now, so you can expand it to 9. But I would just say keep it 8.5 average. So there's a potential of market to come down to high of yesterday, even to here average price, and the 20 EMA average price also ascending towards this area. So it looks like we might come down there, but it sure is taking its time. And when a bar takes its time, where I think the bears are sitting, I kind of lose faith a little bit. So I don't want to see this bar 5 close too high. I don't want it to take out to bar 4 open, because that would not be good. That would actually change the order flow balance, because there's sellers now who sold there are going to be upset. Okay, so, and if the market is trying to put a 5 to 6 point move by bulls, they're going to try to get another 5 point to the upside. So I'm looking to see where this bar is going to close. Okay, like I said, there were already two minutes there. And I said a lot can happen, and so I have to wait. So there is now less than half a minute. If the bulls cannot close a bar above the open of bar 4, bears can still sell this and finish the job. So, but if the bulls actually close this bar a little bit higher than the open of bar 4, somewhere 1 tick above 74, 74.25, which they couldn't, then they can actually end up going up to 39.78. Okay. So they couldn't close that bar 5 where I wanted, I thought they would, but this bar is now trying to close, and it's trying to get to 77, 78 area. But if this bar also fails and collapses, we could still come down. So this is spike pullback. They're testing the pullback area. Bears have about 2, 3, 4 bars to still come down and test the bar 4, because many people sold that underneath, one tick underneath 4, and got stuck, and they're going to try to sell probably, now the bulls are making 10 point, probably somewhere around here to bring the price down so they can break even. So if you're stuck here, and because the conditions were great to come all the way down here, but now what happened? It just went against you. All right, I was in there, so I'm going to have to sell up here, and I have to break even. I can't be, I can either, hit close and take a loss, which I could do, or I can wait for bulls to finish 10 points, okay, and see if there will be any sellers there somewhere here, okay, wanting to sell, and the price comes down here and breaks even these bears. So market will always going to upset you. You just have to decide, are you going to hit close and take a loss, or are you going to sell here as these bulls are taking profit and see if the price comes down here? Because bulls did something there that they were not supposed to do. Bears were planning on a limit. They already sold with a stop order. They wanted to sell with a limit order, which they started to sell, but nothing happened. They couldn't come down. So now they're looking for a better place to average their bad entry short on their bar 4. Bulls actually reached the 10-point area around 9 point and something. So they're taking profit. You see how that bar is coming down? Okay. So they made about 9 points. 10 point is here. There's still 2 minutes for that bar to close. They can still reach up all the way here, or it's going to start taking profit. And if some bears sell, we have a double top. We might still come down. Yes, I do have TTM squeeze. I do use it. It's on my Thinkorswim chart. It's just, that's the only indicator that I like keeping. I don't really look at much at Thinkorswim. Sometimes I see a good, I have an account, so I can take trade or two during the day. You kind of hear me here. It's beeping in the background when I take profits there, but I do have a TTM squeeze there. Yes. So some bears did sell 10 points above where they entered, okay, or 5 points. Maybe that's not even a 5 point, but let's see. Yeah, just about. But it's not. So I would actually measure from here where they sold. So now it could still come down here, but I'm not interested anymore because I'm upset the fact that we went that much, and that kind of ruins that 8, 9 point average. Okay, so I'm going to actually measure from here. So that's 9 points right there. Okay. Now they could get 1.5 ATR. Okay, they could still push this, but I'm no longer looking for 9 points from here. You can, but because it moved so much so that I need to remeasure maybe 9, that's 7 now. So 7 points is right here. And because of that, bulls want a double bottom, but I think this is a double top bear flag. So the bears want to possibly come back down here, but because we went up so much, bulls are now, can we get a double bottom and trap the bears and go higher? But this is still, I think, a bear flag structure. You just have to take profit and then leave a runner. So I kept my short. I sold here, like I said to you, and then I averaged the contract that I sold here, took profit, and I left a runner that is my original contract because I wanted that original contract to make money, and that right there is making money. So good job, bears. See how I averaged in and how I fixed it? You have to have faith in the market. So if it turns on you, and if it were to close another bull bar, because it could have gone to the 15 point, that I had to make a decision. Okay, if I don't have a big account, you cannot do this with a $2,000, $4,000, even a $5,000 account could be difficult. Okay, if your discounted contract size costing you more than $500 a contract. Okay, so you have to think of the risk. How much are you risking with your account? So when somebody tells you, oh yeah, just put in $1,500 and you'll do great, they're lying. You're going to lose your account so fast, blink of an eye. So, but if you exercise it, you sold one here, maybe you could sell 10 points above, 5 points above, you could sell another 15 points above from here to there. It's eventually going to come down here. It's going to give you a break even. It is up to you to take that break even. Has Al sat down with any programmers and provide his price action for them? Is Al creating set of indicators for us? Oh man, that would be great. I will be trading with those every day. No. You sat with Al for months and years in his trade room, and you program your mind the way that he trades. You're that programmer. And you're the indicator. So trust what you learned. I'm happy because I made money. That's all it counts. That's all that matters. Can I bribe Al? You know, I always thought about that, but okay, so this is between us, okay? Let's keep it here. Let's not talk about this to Al or anybody who knows Al, okay? So this is a big hush-hush. I always talk about that. And I always wanted to like send out an email to Richard and can we actually have him after this book that he's writing, his 4th book, can he actually just sit down and create us some good indicators? I'm just kidding. I'm kidding. You don't need indicators. Everything you need is in the Brooks price action course. Or if you don't have time, you should have time if you want to learn and trade the right way. At least buy some of Al's 1 year worth of, it's nothing more, it's like $50 a month of his recordings. Have your own library and just watch him. You're going to learn a lot because he repeats the same setups over and over. Okay, so this is a trend, bear trend from the open. We already know that. What does a bear trend need? I said a bear flag. What is a bear flag in essence? If something's selling and if it's reaching some kind of a support area, what does it need? It needs a better price to sell with another leg down. How will it get that better price? By pulling back up. Okay? Look left to see if there is a possible double top opportunity, like bar 4 high, like bar 2 high. Now, bar 2 high pullback would have been a 15 point. Probably. Yeah, so there you go. Just about little above if we were to go. That would have been a 15 point right there. Okay? So, but they didn't need that. All they need was 9 to 10 point, 9.5 right there. And just came right back down. So if you are selling, you see something so nice, oh, I just want to jump in and sell. Say you sold underneath that, you sold underneath that, and you're looking for continuation. Always look left. How close am I to a key price level? Key price level is always known as the EMA, but it could be a magnet. It could be a breakout test. It could be resistance, okay, turned support, okay? As we get closer there, you're going to end up seeing a pullback. I warned you right before bar 5 started the pulling back up. I said, we're going to pull back soon. So be careful, okay? Now, some people can handle that pullback. Some people can't. I was able to handle it because I was stuck underneath 4 and I was talking. I didn't pay attention. I really wanted to see a continuation in here. But I did warn you on a higher time frame that we're probably going to test here, or we're testing right around there, because there's a channel here, a wide channel, or like this. And we're breaking out of that channel. There are always buyers waiting to reverse that and trap those bears trying to sell. Okay, so that's that pullback I was expecting. But look what the bears did. They broke the channel, or I'll take that, right? Retested it, and now selling. I said, well, they're probably going to come down to Asia high. That gold line, I said, we're going to test. And if we continue to sell, this is where we're going to test, the middle of Asia and midnight open. But we are going to bounce. No, I am not left-handed. I am right-handed. I have tried using my left hand back in 1997 when I almost broke my arm, and I was a junior art director in a advertising production house back in Istanbul. So they told me to train a bunch of people now that I injured myself, and so that's when I started using the mouse with left hand. So I can use the mouse very well. It actually, I had about like 3 to 4 months to practice. But for the life of me, I cannot even write my name straight. But I can use, I'm sorry, just, I know you're being sarcastic because I'm all over the place with that, and it's all, you know, with the lines. If you're trying to say that you're creating such a mess with your left hand, I agree with you. I'll try to be a lot more cleaner. But okay, so here we are coming down. We're coming down to 39.55. I said we're going to bounce there. But this is a beautiful swing. Big up, now big down. Just want to open this up a little bit so you can see what's happening here. Let me get rid of this for a minute. So you can see, what do you guys see here? We're breaching that a little bit. Why? Because right underneath is a tight balance zone, a trading range. We're testing it right there. And there are magnets there. So we're going to bounce, but we could actually reach underneath before bouncing and then make a pullback that would give us a bear flag. That would be the second leg of the swing. This is where I think the bears are trying to come down, but they're going to have to break the Globex low. Either that, okay? Now, what do I see here that is exciting me about this line or this horizontal line? There's a wedge there. Do you see it? 1 pullback, maybe 2 pullback, and a 3. So I see a structure. So I'm looking for 1, either like this here, or let me hold on, like that, 2-legged move or 3-legged move down. So basically, if this is a wedge, I'm connecting that. This is a pullback after the first impulse leg, 1 to 2, right? And then the next impulse leg begins, but doesn't go too high. Then we get a shallow pullback. So that's the second correction, 3 to 4. And then we get the third push wedge top. That's actually wave 5. So what am I looking for? I'm looking for 1 to 4. I have 2 targets. The horizontal target comes before the projected target, 1 to 4. That means we could get a big bounce and we may not pull underneath it unless bears want to break this after taking profit and then keep swinging it down to that projected line. So, but first things first, also something else I see. So I'm going to get rid of all of this. I'm going to get rid of all of this. What else am I seeing here? Now squeeze your chart a little bit. Forex traders, pay attention to what I'm about to show you once again. Look at the market going down. Structure, not a good breakout. Bounces, but the bulls cannot break out with multiple structural breaks. So the bears continue down. There's a structure break. It's not that good, but now we get another one. Look at this imbalance bars. Market is in a swing bear, swing shorts. So we get another one. You also have a wedge there. So now we finally turn around. First structure, maybe a bigger structure, second structure, but the actual structure happened here. Are we down? I generally look for 3 structural breaks, okay, before market rotates. And that's the wedge or the Wolfie wave, same thing. So I'm basically looking for, here's a 1. I could say here's a 2. Here's a 3. So when the market comes down, if you're selling, if you see an impulsive leg, a bull leg begin and move the price all the way up before reversing, the beginning of that impulsive leg is where a swing bulls are waiting. They're going to test once, they're probably going to test twice, and they're going to try to swing. Okay? So there's one, I see it right there, and it's marked right there. The structural behavior also on Forex chart that you can catch for massive amount of pip moves. Okay? But if we come down here, we're already bouncing a little bit because there's a neckline there that we broke. So they're testing that. You see that? See that bar? You see that bar is low? What is it testing? It's testing that neckline, that impulsive move began first, came back and retested and went up. So that's where we're bouncing. But that doesn't mean that we found massive amounts of buyers. No. This is where market will come down. It's bouncing now, making you enter the market bullish, only it's going to go down here because actual buyers are waiting here. Now, when you're looking for a swing long setup, you also need, that's one part of the equation. The second part is looking for a liquidity zone because that's where the stop sits. So you're going to be looking for equal lows. Equal lows right here, double bottom right there. You know these buyers have stops there. What does L say? We're probably going to test there, right? It's a magnet, but it's also, there's another leg here. There's another structure that we broke. We might even dip here, trap everybody, and then go higher. So I think that these bears, for that reason alone, could bring the market down here. Okay? So I'm going to leave some room for bears. But I did say that we're going to bounce here first, so I was right. And you needed to take profit, even if you didn't look at any of this. You're looking at this. This happens all the time. I said we are in a trend from the open for bears. We are going to come down and test the bar 47 low. We're going to come down here. Look, this is our average price, 20 bar average price. Okay, that's it. And then I said EMA is coming down, so we're going to go test the 80 high, and then probably that bar 81. We're gonna test the bar 81 midpoint. Now look at that bar 8. Did it do all that I said? It did. I'm just showing you extra ways to look at much bigger structures if you're using a Globex chart. So that's how you hold it. So you have a bear flag. That's also a bear flag right there. But look what just happened there. Bar 8. Bar 8 is a continuation bear bar for bar 7 breakout. But it's a terrible continuation, isn't it? The body is small. It closed on its high. So why is that? Because bears know that this is what they needed to test. Okay, and they did that. So can the market actually turn around and go higher here? Leg 1, pull back. Leg 2, pull back. It's trying to make the leg 3. Leg 3 can be a new low, or leg 3 can be a double bottom with bar 8. Can they swing this further down? Well, look left. Do you see some gaps? Bull gaps. Yes, I have a bull gap here. This is where the bears want to close. I have a higher low and more bull gap here. This is where probably the stops are, right? Because this structure was broken to the upside. So where's that higher low? Right underneath bar 81. Do the market makers or market or anybody who looks at this chart, do they actually know that there's stops underneath 81? Yes. Why do you think that they came down and test that 81? Because they're trying to scare these bulls might be holding on with a stop underneath there. By bringing that bar 8 there, wouldn't you have a little bit of like a miniature heart attack? I would. Oh my gosh, it's getting so closer to my stop. Should I be hitting? You're going to go involuntarily hitting the close button, and then the price can go right back up and you'd be upset. So that's how I find which bars that the market is trying to go test. Plus, I've seen this happen like a zillion times, so I kind of know. So that's why the RTA charts are very valuable than the ETA charts. I used to be a big fan of 4,000 tick chart on ES. I love trading them. And then the 4,000 tick chart for oil. I traded them side by side because I was following a market structure. Double top means neckline. Break of a neckline means first flag. Break of that low, second flag. Break of that low, expect at least 3 flags minimum. Or the 4th flag is actually a failed flag, failed follow through, and then we get some kind of maybe a trap, okay? Squeeze, come back, first bull flag, second bull flag, third bull flag, so and so. You know what I mean? So this all goes like this, or it could just go pop and then trap and then come back down, another leg down. So it just repeats and repeats and repeats. But you can find all of that here as well. Look, pop, comes down, going back up, gets a second leg. Look at that, double top, comes down, flag, 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 finally around support, turns around. Or you can count underneath the EMA how many flags it made. Underneath the EMA, I look for 2 flags minimum. If a flag starts to show up above the EMA, that's it, that's 3 flags. Nearby support, I'm going to look to heavily take profit because it could turn around. Even if it just goes to the EMA and comes back, that's a flag. But if it fails to break that, that's a failed flag. Can turn into a higher low or lower low, double bottom or triple bottom. Anyway, so that's that. So I switched to RTH after taking the course. I said, this is great because I can tell a lot earlier what the market is trying to do. So I don't have to count anything. So we're at the average price, and now market is looking for bulls if they're going to actually start buying here. So bar 8 shows us some sign of bears seeing that possibility and taking profit. And bulls haven't really entered the market just yet because we don't have a good bull close. So we don't know if there are bulls here. So we might be getting a second flag. You see that right there? You actually have a triple wedge there. See? Up on this, down on this, up on this, down on this, up on this, down on this. So, or if you don't see it, then go to 2 minute. Does that look like a flag to you? To me, yes. Double top at the EMA, but might get another push, either a higher high or a lower high. Let's see what they're going to be able to do here. So bears are still trying to get another flag here. So look at that first sell. Now this bar, if it's a flag, you'll know if this bar closes bearish. It needs to close down here to trigger the flag sell. Then those bears will take profit here. They're going to unload some contracts, and they're going to leave one for the flag breakout. Sometimes those breakouts don't happen. That's how you get a double bottom underneath EMA. So everybody's watching now how the bar 26 on the 2 minute chart will close. You could get a 3 push up on this down, this up on this down, this up on this. They could still sell wedge bear flag. So if you want to see something, there's so many ways to find them, look and find them. I can literally tell that bears are trying to put that flag, but it hasn't set up yet to sell. Now, what if it just fails? Well, then I need to see 3 bull bars, at least 2 of them closing on its high on their highs for a momentum bullish move up, because then I would say there's a complex 2 legs at the EMA failed, or there's a 2 legs at the EMA failed and the bulls are taking over. If I get another bull body, then I could say this flag might be a deeper pullback before selling, or it's going to fail altogether at the EMA, which is a key price level. So if you were bear, you needed to take profit here and you'd be flat and waiting to get a confirmation for another flag. Or if you are bullish, you just bought into profit taken and you're holding a runner. Not necessarily you are a bull jumped into the market. There's a breakout test area. There might be some sellers there. And on the bear flags, you see these bull bodies suddenly, they come down and collapse here, and then you see a big upper wick. That right there will tell you that was just a trap for bulls, but I don't see that yet. So the bulls are still trying to go back up to bar 5, okay? Because what is bar 5? Bar 5 is a bad sell signal bar. But they did sell above it, and then they had a bear breakout. So this area is now a sell zone, aka miniature supply in between 2 legs. So there are probably sellers there. Let me see if I can show you an example. Yeah, look. So this bar, they made it look like bullish. This bar 9, one point it was a 1 big bull bar, okay, but ended up closing on its low and had a big upper wick, okay. So you have this 2 legs and a bad signal, so this area becomes a sell. So they did sell, but they couldn't breach that lower. So bear flag failed there with bar 10. And then they tried again because now they have a wedge. So this is a much better bear flag. Sometimes if the bear flag is the last bear flag, or say it's the second bear flag, sometimes you get this channel longer, but it breaks out anyway. So that's what we might be having here. All right, so let's see. Can this be now the 3rd momentum bull bar? Sure, it can be if we're going to get a down and an up and a trading range. Bulls need to close that bar somewhere up here above bar 11. But if that bar, the potential third bull bar, ends up closing bearish, then there's no momentum. This was just a pullback from a key price level to get a much better sell opportunity to sell higher and make money. No one's going to want to sell at the EMA. They're always, if you're coming from above to the EMA, there are always buyers there wanting to buy. Those are the bull machines. They're going to try to make money there. But if there are not enough buyers in the order flow, this ends up being a false momentum bar, turns into bear bar, and then you get a bear flag. Market wants to keep, okay, price above midnight open. Midnight open for US day begins midnight. Okay, so these charts are with Eastern time zone. So so this area, as long as we stay above 39.55, we're bullish. But we start to breach below it, we become bearish. That's how I know my premium and discounted zone. Okay, so we're in the premium market already marked up, and that's when I said, watch out. these guys have been marking up the price, the contract prices. They want to get paid, right? So you're a wholesaler. You buy a contract low, you mark it up, and then there are a bunch of buyers want to buy it. You sell it to them. When you sell with you, with so many other people, thousands of people are selling, you know, it just goes down. So bears are trying to get a bear. They got a bear trap. So that bar 10 and 11 ended up being a bear trap. But I don't like the way the bar 11 body closed. That body should not have closed, you know, above bar 10 high. That upper wick should have been a much bigger wick. So what does that mean? That means this bar selling right now will start to take profit heavily right at the bar 8 low, because bulls see that failure for bears, okay, preventing. They fail, bears fail to prevent that body of bar 11, okay, closing above. So that body should have closed down here at least and should have gotten a much bigger upper wick. So bulls see that, and they see that as a failure, and so they're going to do everything to prevent bar 8 low breakout with a bear body. So if that fails for bears, twice failing, right, that's bad. That could create a failed bear flag. Failed bear flags can happen a double bottom high 2 long entry, but although honestly sometimes you get high 3. So this is high 1, high 2, I guess. It's difficult to call it high 2 because we didn't make a new low, but if you do, this is high 3 and we could get a high 4, but I would say this is high 1 and a high 2. So a failed bear flag double bottom at EMA could give us a bull flag. So hopefully my logic is making some kind of sense. So when you're buying and selling, you always have to be prepared what is going wrong here that could prevent this bear flag breakout. And if I'm selling here, how do I be smart about not trying to force the trade come down to bar 8 low, and then you know, you're expecting a breakout there. And if you're trying to force the trade that's going against you with bar 12 high like that, that's because there's a reason. And I just explained that reason both on here and there. So we have a limit order market. We have about 5 bars now going sideways. We're still in the bear channel, but we don't have a good sell signal, do we? Look at bar 12. It literally trapped the bears trying to sell because everybody paid no attention to what just happened here. They tried to sell above 8, okay? But those bears sold above 8. They were able to scalp, but then bar 11 goes and closes like that. All they are going to get is a scalp and a possible trap of bears, which I warned you. So the bulls, let's see. They already made 10 points, so that's why it was keep coming down and coming down. But they're trying to get above this high, 11. That means they're trying to take the market to 14 to 50 point area, which is right there. So they're trying to surge, but they need to close this bar right here or above, one tick above. If we get a bar that closes above bar 11 high, bull bar, not only we could go up to 14, but we're going to take profit. We could surge. ATR is pretty big, so average bar is 7.5 points. We could end up going to here, 14 and 19. So, but first, bulls need to close this bar above 11 if they want to keep going up. If they think that they trapped the bears here, which they kind of did, they now need to close a bull bar. Some bulls buying one tick above 12 already entered, but I don't know if they couldn't make a 1 point, did they? So if you entered at 68. It needed to go to 69.25. Couldn't even make it. I didn't buy. I didn't like this at all because it's a limit order market. I don't like to buy above bars in a limit order market or sell below bars because your short-term trend is still bearish. So if you're buying into this, you need to at least have a really strong bull body. Now, where is that? I don't see it. So I didn't buy it. And then I said, well, if I don't want to buy, then what's my criteria? What am I looking for? Well, it's because they are at the 10 point. These bulls are already taking profit. They just couldn't find new buyers to get above the 10 point, to get to the 15 point and a 20 point swing. So they're having a hard time. So that's why I said I need a bar close above 68.50, somewhere here at minimum, to get the 14 to 15 and then 20 possibly. I don't see it. I'm not going to buy it. I filter my trades religiously. I mean, call me chicken if you want. I don't care. It's my money on the line, so it's up to you to take the trades. And I think you should filter your trades as well. If you're not using order flow, okay, you need to really understand the language and the bars, why they close the way they close, why they go up and fail or down and fail, what's preventing them. Then you can make your decision. And another, since today is Friday, and I'll just speak my mind, if you guys don't mind. You have next 2 days, and then, rest of the Friday, so 2.5 days to really go in there and open up the chart. Just do nothing. Absolutely do nothing. Just download the last week. You got really nice trading range, price action, the breakout of trading range expansion, all that, measured moves, all of that in front of you. Limit order scalping, flags, whatnot. So just download it. Just sit there, grab a coffee, couple of, snacks, close the door. Don't let anybody bother you. Take notes. Watch the behavior. Okay? Then the next time it happens, it's going to happen exactly like that. Exactly like that. No different. And then you're going to recognize it. The more you watch it, more you recognize it. They call it muscle memory, the brain muscle memory. I think that's what Al calls it. I've heard Brad say it several times. I mean, that's how you recite movie lines, right? So because you watch that old movie, so many times now, you're like, citing all those lines. Trading is like that. These are basically your lines. This is your script. You know it so well. So just watch it. Watch it for a couple of weeks, couple of months. And then when you're ready to trade, you're like, oh, I know exactly what it's going to do. Bar 11, 12, and 13. No, it's not. Because think about, what is a sandwich, right? You got 2 bread loaves and then something stuck in between. Generally, you don't take a, white bread and a, whole wheat to make a sandwich, right? So you have you have one kind of bread and then you got something in between, right? So you want 2 bear bars and a bull bar, or you want 2 bull bars and a bear bar. Like, this would be a good stick sandwich. And they sold it underneath that bull bar, 5 and a breakout. So this is not a good stick sandwich because, your bread cannot be sitting up here and then the other bread and then meat is hanging out with your mayo. Get the point? So this is not stick sandwich. So this is not a good stick sandwich. 76, 70, 77, 78. That's that, you know. Somebody really messed up your stick sandwich or your sandwich because it didn't go anywhere. It's a joke, but it's actually, you know, it's an analogy, but it explains. So what are you looking for? Like this one's all right. And they started to sell here, but it's still lopsided. You want them to be almost the same size. Look at this one. It sold a little bit even. Anyway. Manja. So you got the point. Picture the sandwich. 39, 68, 50. What happened to bears? Well, I said it's a trading range behavior because it's a small trading range. It's a limit order market until it's no longer a one. So it hasn't really morphed into a stop order, but we don't know how this bar is going to close. All we know is that this bar closed high, so the bear machines will sell it. Bar 13 has a body closed slightly lower than its midpoint. That makes it a bear close. So the bar 14 bull machines both that close, or maybe even down below, but they did buy it, so they are scalping. So we're still in a limit order market. So let's just wait. So now what am I looking for? I still don't have a bull body closing above 68.50, but I also see something else. I see now a wedge up on this, down on this, sorry. I see now a wedge up on this, down on this, up on this, down on this, up on this. So what do I got? A much better wedge bear flag formation. I was saying earlier, guys, how to fix this trade that went against you. That right there, 4, 5, 6 is this is the area that I was talking about. If you sold here, okay, and suddenly you get this reversal bar 5, you know, you have to sell 5 points, maybe 5 points above, or 10 points, or if you mark here 5 points above or 10 points above, you're going to have to sell higher to fix your bad trade. Now, that can happen for two reasons. Either you're trading badly or something happened and went against you, which will happen most of the time. So that doesn't mean that you're a bad trader. But if you're a good trader, you know how to fix it. So you have to have a big account to be able to sell 5 points and 10 points above, and then you know, get a break even to exit out without a loss. And if you have a bigger account, and say if the bar 6 actually closed on its high, strongly bullish, I said, then you would expect maybe price going up to 15 and 20 point, maybe up above that high, and you would still want to sell it, okay? Or maybe you want to sell up here. Eventually, the price is going to come down somewhere in a bit just to get you out. But and that requires, you know, large accounts. So I would not recommend you to do any of that. Learn how bars open and close. Learn where the sellers are. This is a strong leg down, right? And some bears are taking profit because we're above EMA. Doesn't matter if it's a trend from the open, we're still above the EMA. And there's a bull gap here. So you're trying to sell into it. So some bears will take profit. You have to always be prepared for that. But they did sell, and we made a double top bear flag, and we had a second leg. That was the first bear flag breaking down. Now we're at the EMA. These guys who sold with 2 legs got trapped here if they were still trying to sell. You needed to take profit there. So, and that is right here is actually a pause. Think of it like this. Smart money or the banks, they actually sold. They're pausing. Pause can go sideways. Pause can go a little bit angle to the up, or pause can go like this, goes up, finds sellers, and comes back again, depending on how the market makers or smart money, they're all trapping each other in that pause. And that's where you do not trade. You just wait. So right now I'm seeing 3 push top, but very weak bear price action above the EMA. So I'm just going to wait. If I want to sell, I'm going to wait. If I want to buy, I already told you what I'm looking for to buy, right? I'm looking for bulls to close above the SPAR with a bull body to get to the, if I'm counting from here, to get between 14 and 15 points. So the 14 points there could go a little bit above. But if they cannot close a bull body above 68.50, I'm not interested. Because if they cannot move the price up here, they're not going to move the price up here. And this could end up becoming a wedge bear flag, and then some institution finally throwing money into the market and selling heavily. So this is where you would look at time and sales window to see if there are big whale sell orders. I don't look at it because I don't have patience to look at a tape and then try to read the bars. And I don't think L looks at it either because he explained why. He does though. I mean, this is where I get confused. And Richard, if you're listening to this, please jump in, because L does say that he doesn't look at it, and then he comes in and he explains it like the pro that he is. So I get confused. Is he really looking at it, or is he not looking at it? What am I supposed to do? So I got really torn there. It's like, should I learn how to read the times? And say, I just didn't care to read it. I don't look at it. I tried. This is what I read, and that's what L said many times. You can find success with this, but it really doesn't hurt to learn to read it. I know you read it. Richard reads it very well, in fact. So, but according to L, time and sales, you get sample data. You don't get the full picture unless you invest. Used to be a $1 million minimum. And then one hedge fund owner in New York City actually told me, oh, no, those days are over. You have to have really significant amount of money to get actual data. But then, things change all the time, and I don't think you have to anymore. I think Richard said like a couple of months ago, you can still get a good reading. You don't have to invest millions of dollars with your broker. All right, so bulls couldn't meet the criteria, and we have a 1, 2, 3 push wedge with a lower high, and bears are trying to get a second entry short. First entries, they're trying to get a second entry. So if you put a trend line here, they're trying to test this trend line right there. That will be the third push. If the bulls are waiting there, they could turn this around, or the bears want to break that and pull back and sell again. So it's going sideways because it's a pause area. Can the bear flag actually fail here? It could be like this. Either that one is an overshoot and that one is an overshoot. So now we have a third touch, and third touch generally bounces. So now I'm going to wait. I'm still waiting. I don't want to sell something that doesn't present me a good bear bar. That bar 16 looked really nice. Okay, great. I said they're trying to get a second entry, but the bar hasn't closed. If I were to sell that bar while the body was down here and bearish, I would have been trapped. So why don't you just wait for this bar to close in 2.5 minutes and make your decision? Okay, so if the bulls actually do close a bull bar above 68.50, can they still make it up there? Well, you have a micro double top with 14 and 15. They can still go higher if they do close that bull bar exactly where I marked, but then they could still trap and then come down. So I'm just going to sit on my hands, and I'm going to wait because I have no rush to do anything. Remember, if we gapped up, we came back to the EMA, okay? Bulls want to actually swing this. Look at the time. So it's almost 11 o'clock, right? And can we start some kind of a swing that could last 2 hours, hour and a half, 2 hours. Those swings might start small, and look at it. Maybe this is a small pullback bull trend. Look, so if this is a small pullback bull trend, that means we need another bull bar closing above 68.50 and testing the 14 to 15 point area. So let's see if they can actually go to the 71.25 or 71. The bulls can actually push this. So there's no close above 68.50. But bar 16 is really nice. Now, we're getting into the bar 18 breakout or reversal time, right? It starts with bar 16. So, for bulls, if this is a small pullback bull trend starting, they really need to keep closing bull bars and take out the prior highs, which are very shallow. So they need to take out that bar 14 high. There might be buy stop orders waiting above that if they do think that this is pullback to EMA. It could be a down, up, and then down, maybe a wedge EMA and a double bottom or another wedge. And they might be trying to grind further higher to that high, but that's going to be difficult, I think. But let's see. Sellers could be waiting right there at the 71.25 area, or they're just gonna close a strong bear bar and sell here. Yeah, so Richard just answered pretty. Yeah, that's the one that I was looking for. That he would. I hope that he would post it because I want to go back and look at it over the weekend, maybe this afternoon, because that's how he trades. Along with Brooks' methods. Well, think about it this way. The question that was asked, can the bear flag could change into bull flag? Well, what do you see here? This is a bull gap. So that's actually a pull, right? So maybe we have a, what did I say? Double bottom, right? Bull flag. But that means they really need to push up towards that level, and that could be difficult. So this whole area is still a trap area for bears trying to trap the bulls still. But if this is a small pullback bull trend, that means bulls will buy every pullback 1 or 2 bars, and they're going to keep grinding upwards for about maybe hour, hour and a half, maybe 2 hours. I don't know. I'm going to try to find examples for you. So if the bulls actually buy underneath this bear bar, if the bar 17 closes bearish and then they buy it, okay, the close or the under, and then more bulls jump in at the prior high 14, that's it. Then we're in that small pullback bull trend, and that could go up to 71, 71.25. Then continue to go up to 77 or 77.25. Then further up to 83 area. Might even go all the way up to 92, 39.92, which gets closer to the 4,000 round number. So, open of the week is still magnet. But there are bears waiting right at the 71, 71.25, okay, to trap these bulls. So it's not that easy to start a trend. It starts slowly. You just have to read the signs. Now look, there's a limit order buyers, right? They start to buy underneath this pullback bar, 9. Went up, made a new high. Then it came back down. They bought again underneath this bar, right? And the bears were not able to close a bear bar with 12. So they're buying. Limit orders are buying the pullbacks. Then you get a bear bar 13. What happened there? The buyers immediately bought the close went down and tried to, process the orders underneath the 13, couldn't even breach 13 because the buyers were so eager to buy. So they're buying, and then they bought above it, came back down. Again, buyers underneath this pullback bar, so they're buying. But it's not that strong, and 68.50 is still my criteria for bulls. They really need to close a bull bar above it. Bears want a lower high. You got a micro double top, you got a wedge. They want to have a lower high, which kind of they got it. So they want to close a bear bar and still take out these lows. So the fight is on. Bears are trying to break that. Or you can even either that way or that way. They're trying to break that trend line. Here's their chance to get that bear flag breakout. In fact, you can actually do this. Sorry. For your breakout. That's your, if they can print that bear body underneath bar 8, remember what I said, if they sell it up here, they're going to take profit here. Why did that bar 18 body go up, came down, go up again? Look, why is it like going up and down? What did I say about the flags? It needs to take profit first at the prior high or low. In this case, it's a bear flag, so it's the prior low, because they're bulls trying to prevent that breakout, so that this would be a failed breakout, and the bears cannot come to this first target zone, target area. So, and that's what you do. You take profit with them. If you are 100% sure that this is going to sell, or 99% sure, then leave a runner. And if your runner doesn't run, then you can exit out. That would be the loss. But now the swing bears, they want to see a bar close below bar 8 with a bear body, so they can take that stop up above here and bring it down to that lower high. Or maybe this is their lower high. They want to bring it from there to here because they took out that low. So that's what's happening here. And look what's happening on the Globex. I removed those lines so you can see it clearly. 39.55, bears are trying to break it. They're trying to get down to here, 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 maybe even here. Buyers are waiting here. But first things first, I want to see if this bear flag going to fail. Now, you could have sold here with the micro double top, but they're bull bars, and that's difficult. If you sold here, which they did, it ended up going up, but it couldn't, close above it. It couldn't close above here with a bull body. So I see that there's failure on bull's end. Then this happened. Okay, if you sell this with a stop order, you're still in a limit order market. Better to sell above things, not under things. So that's why bar 17 ended up selling above bar 16, because smart bulls, they're selling above bull bars or bear bars, whatever. They're selling there, okay, because they know this is a limit order market. So they started to sell up there. Remember, look at the bar 15, 16, and 17. What do you see? Don't you see this? What I taught you? Even though this is lower than that, but still this is where they're selling. So they're selling above 16. 17 went, I think, one tick above. I can't really see. Yep, it did. Look, bar 17 high went one tick above. And bulls couldn't close. So they sold. Now they want their money. They're going to take profit right around 12.8. That's why we're bouncing. We're in a trading range. We're testing the trading range lows, so there are buyers there always. Bears failed again, breaking bar 8 low. So what happened to the small pullback bull trend? Well, it's still 2 bars, but 18 is too big. So either bulls have to create a suddenly irregular bull bar, to make me believe this is it. They're going to buy here, trap, and go. Good luck with that because bar 18 is too big. Then I'll say, okay, we're still in the small pullback bull trend, but I don't see it. So we got now a wedge, 8, 12, 18, and an inside bar. But the inside bar is still printing. I don't really know if that's a 100% inside bar. But if it closes bullish and an inside bar, then there will be buyers buying above it, thinking this is it. We're trapping the bears again, and we're gonna buy, and we can continue to grind higher. Or this is the second flag, and we're gonna break out. We're gonna come all the way down here, and then we're gonna finally reverse. So we could find ourselves right where I just marked. Very quickly, we need bars closing below close of yesterday. Now, I'm no longer interested in any of this. Done with that. It's done, including that. So, why did this bar end up being a inside bar? Why is it pulling back up? Who's going to tell me? What's going on here? Bar 19. No. I'm doing a math. We do math here. We do a very quick math. Yep. It came down all the way here. Not that, sorry. Right here. 15, 14 point bounced, 15 point bounce. So it was bouncing. They're trying to close a bar right there with a bear body. Okay, right there, 1575. If they do that, they're going to go down to 19 to 20 point area. Now measure that. That's right here. 19, 20. So this is where the bears are trying to take us. And then maybe an overshoot and get this target. But close of yesterday, I said it's magnet. There might be buyers underneath. Why? Because there's a gap here. I said much earlier, there's a gap here. Bears are trying to close that gap and come down to here. Breakout, terrible continuation, but then another breakout. So the stops are here. So now they need to break through this. But they're still at the 15-point zone. They need to take profit. So this could bounce a little bit more. If they cannot print a bear bar at that 1575, they're not going to be able to get to the 20-point zone. They're trying to print that bar at 1575 because this is where some machines see the extension of this move down, and this is their strike price, and this is what they want to strike. They want to come down here and test it. That's nice to have. I don't always use these. I'm just showing you, okay, the follow through. But if they cannot close, now what happened? They couldn't close. So if you measure from there, that is one tick above. See that bar? 19 could not close there. And that's if you measure from there. If you measure from here, that's where the actual selling began, right? So that's 14 point. They're still bouncing. So that means they have to print a bear bar right there, that pink line, to get down here, or the 20 point right around here. So it's bouncing still because these bears are still taking profit. Now, but what they did something here is important. They actually closed the bear bar below the bar 8. So this is actually a bear flag breakout. So they're just looking for a quick pullback to sell. So let's see if they can find sellers right here, 95.50 for about 6 points to the downside. They're still taking profit. They need continuation bear bars. But this is basically a breakout, okay? So there's something accomplished there by bears. they're just pulling back. If they think that this is too low to sell, they're going to need a pullback. And they also acknowledge, okay, this gap, the bull gap. Nobody wants to sell into it unless they gather some force up here and then they sell. Because anybody who sells here, they're selling too low. They're not going to be able to mark down their short contract to make money, right? They're shorting. So they want to mark it down at the higher prices to make money by shorting. So another way to say, so if they have sold about 14, 15 points, they're taking profit because that's a swing. But good news, bears did break that bar 8 low with a bear body 19. They just want to continue to come down. To, where is that? 45, 75, 45, 50, maybe, I guess 45, 75. But they need to find sellers here. So I'm waiting for this bar to close to show me if they actually want to sell. That's double bottom in a way. Under the EMA, bulls want to see a flag and they want to buy. So it's a difficult area. And look what's happening here. We're still above the midnight open. That 39.55 is an important level. If we do break below it, we're very close to the Globex low. Now, we're going to break out from one end, okay? Since we're closer to the Globex low, it's possible that this is just a pullback and they want to continue to sell, right? So I'm going to wait. And look where the 39.45 or 46 is, right near the Globex low. Happens to be the extension bear flag target, but you do not want to see bulls close above the low of bar 8, okay? That's not good for the bulls. So, I'm sorry, that's not good for the bears. Bears should not allow that. They should just make this bar 21 bearish and close it below bar 8 again and sell. So I look for these levels before I do anything. We're coming towards the 11:30 and I'm looking for some kind of a wedge setup for a swing, maybe a swing reversal, something. So if this is 1, pullback 2, pullback 3, and some bulls look at this as this is a really good support area and we're actually breached below it, so we might buy here. But do they see some kind of a wedge here? They might see a double bottom bull flag, but still it could be breached at support. I'm sorry, resistance turn, support, support now, turning resistance, go test and sell again. I like to see another push down maybe down to this level right here before we go back up. But we're at a level, you know, bulls also want to buy. I just want to see a little bit more down, maybe to 48, 45. This is not good for the bears. They're kind of failing to sell. So you got your levels. I'm just going to get rid of that so you can see the price action better. Now, look what's happening here. The two EMAs are jumbled up. So that is not good also. So we don't have a good direction here. The only direction I have is this is bearish, and it might be pulling back to sell a little bit more, at least. But if they really wanted to sell, then why did they allow bar 20 and 21 go high like that? And this is upsetting for bears right here. Now on the daily, we have a wedge, 1, 2, October 5th, October 28th, and then November 15th high. So we have a wedge here, but we also have 1, 2, we might come down a little bit. I like to see before we go back up. But this area has always been an interest for bulls. So today's Friday, we get some big moves on Friday. So we could end up going up here and then selling back down. But I don't know if we're going to be able to make that kind of a move today. That's like 4,100. Don't think we're going to be making 140 points. So 4,000 is where bulls want to go, and close the week is high, so we can reach next week up here and then sell. And the bears want to come down and maybe make a micro double bottom with this day, yesterday's low. So they want to test yesterday's low. I no longer need this, so I'm going to get rid of that. Yesterday's low is down here. But bears are sure not doing what they're supposed to do. So now bulls are trying to get a 3-bar momentum again. They try to do that with bar 10, 11, and 12, but it was terrible because you didn't have 2 bars of closing on their highs. Bar 12 did, but look how horrible that bar is. The body closed very tiny. So now bulls trying to get that chance and go test this high, but I don't know. This is resistance here. They're trying to get back to always in long. So you have bar 21, okay, is closing above the EMA, so that's good. They're trying to make a decision here. Do we keep the 5 EMA above 1 hour EMA, close another second bar? That would make always in long conditions. And especially if this bar gaps up a little bit, that means they're going to want to test this high and break out from there, and that would give them a measured move. And bears want to trap the bulls and sell into 39, 49, 39, 45 area. So decision has not been made yet. Bar 18, bar 17 and 18, and then follow through 19. It's a bear leg. So there are some sellers up here. It's a trading range. So if this bar closes on its high strongly, you're going to be forced to buy too high right here. And the machines know that. They're going to immediately try to sell the close of that bar. So this could end up being a leg in a trading range 2021 and 22. Higher this bar closes up here, it's going to be problematic for bulls. Many will buy it, hoping a breakout, but it may not break out. And if it does break out, then that's fine. Then you would look for a breakout and a pullback, and then you would buy. Open of the week would become your magnet. They're actually breaking. Are they breaking out? Let's see. Nope. They have to close that bar up there. Maybe a little bit, 1 tick above. That would be a solid breakout. So, but if you do buy it, you're trying to break out from a limit order market, and it could still pull back a little bit. Bulls are trying to get to the 39.74, 74.50 area. That is not a breakout, but it's always in long. Okay, so we became always in long. I think we were always in long. They try to have always in short here, but it failed. So the bears basically made their leg down, and they got their breakout, but that's all they got. And now we reversed. So you're buying at the high of a trading range. You may want to wait, maybe look for an actual breakout. Maybe look for an actual breakout. They see a double top, bulls see a double top, and they want to actually break out and get a measured move high. But this area is problematic at the moment. A little bit of pullback could still find buyers, and then we could end up going up to 39.72 to 73, maybe even 75. But I warned you about buying too high here. Some machines will sell that close of 22. If they cannot find more sellers, then we could break out. But I think since this is a trading range and a sideways, we might pull back a little bit more maybe. So a bit of a resistance here. But the bull's trying to swing, okay? It's around 11:30, good time, and they have a wedge here, 1, 2, 3, okay? So, and they see a now wedge bull flag, so they're trying to swing all the way up here because bears kind of failed, you could see now. So it hasn't really made a decision whether they can actually go and test these highs all the way, but they're trying. Yeah, you would measure that 20 point from the low of 19 if you wanted to. So machines sold the close and they scalped with 23. Now they're wondering if they can actually keep selling this, or is this it? This is just a, scalp and then get out of the way. So the bulls are going to show up here, and they could, because bulls want to go back up to 39.7250, close a bull bar, and continue to go up to 39.78, 79 area. So they're trying to maybe entering the market here. I don't know yet. This bar needs to close. There's still 1 minute and 17 seconds. But if bears wanted to really sell this, they could have closed this bar bearish. So, but it's still strong bear resistance here. Bears could surprise us suddenly, so just be careful. That's why I said higher this bar 22 closes, you are forced to buy too high. But 3 bull bars, all 3 of them closing on their highs is a really good sign for bulls. So 20 point is right there, 19 point is 72. If you want to take profit there, or 73. I just want to wait how this bar is going to close, because we don't have a clean breakout from this trading range high. We could pull back all the way to 39.64, 63 area before finding buyers. That's what I'm worried about. Okay, so they couldn't close that. That was just a pullback for bears. I'm sorry, for bulls. So, but still no breakout, bull breakout. I think the bulls still want that 19 point at 39.72. But you see the problem here? I don't like that. You're at the top of a trading range. You're forced to buy too high, and you couldn't break out. And that was my whole concern. So if the pullback is not yet over, I thought this was just a pullback, but apparently it's not yet. Because it's resistance here. And, can the bears actually sell this? It's going to be difficult selling against a tight bull channel 2021-22. We could just get a pullback somewhere maybe here. EMA, and then go again. Bar 22 is very strong. So I'm going to wait. Bulls want to go up to 39.90, the 4,000 area, because they see a bull flag. This 39.50 acted as support, which I said it seems like it's support. So we got a really nice leg here. They're trying to get a second leg up. So bulls are trying, but no acceleration. I'm just worried a sudden collapse. Worried about that. But bulls trying to get to the 39.90, the 4,000. They might even try 40.20 area eventually if they can find buyers. So maybe a pullback to EMA. Some bulls could enter. But if you look at the whole thing, this is actually a one big bear channel, isn't it? Maybe like that, or from like that. It's too wide, so what if I just take from there to there, depending on what you're looking for to do. You got a small breakout here with bar 21 and a follow through 22. And if you look at it, bar 22 also breakouts, but no follow through. So if we do come down here, there are buyers probably sitting here. Or this is just a quick pullback and then we're going to get another leg up. So they just seem to can't find buyers enter the market just yet. So now might be the time that they might enter. And that could take us to 72, 73, all the way to 75, perhaps even 39, 79, I said earlier. They can break is above this resistance, which is from 70, 39.70 to all the way to bar 4 high. And this is a leg in a trading range. So leg in a trading range may not get continuation. Can the bear sell this all the way down to here? Well, they need to start now and breach below 23. So it's difficult. Bulls want a second leg up. They just tagged it. So they're taking profit with that upper wick of 25. So what's happening here is this also. Let me show you. Leg. It was a bear leg, broke down. Another one failed to break down, so now we're going up to those highs. But if we do get a trap, there's market knows that the stops are going to be here, so they're going to sell into those stops. We could end up coming back down here again. See that right there? And then we could continue to go higher, but we would be stuck in this trading range all day. That would be bad for a Friday. So did anybody buy the bar 22 high or the close and didn't listen to me? You had a chance to buy at the low of the 23 and 24 and make your money, but that's all you got. And I even told you that 20 point was right up there. So that's where they were going to probably test and take profit. So it was between 39, 72, and 73, which they tagged. So hopefully you understand a leg in a trading range versus a breakout or failed breakout and what that means. So they could still get their breakout, but it needs to pull back somewhere. Okay, so maybe to EMA. And it kind of did pull back now. So you have an up on this, down, this up on this, down, this up on this. So it's like a wedge there, small wedge. Now they might be trying to come in, but they need to close this bar bullish. But they haven't even tagged the EMA, so I don't know if this is sufficient. So their bulls are trying to get a high one. Okay. I have to wait for this bar to close. Sometimes you have to look left and see where you're buying and maybe wait for a pullback instead. I mean, we can still go higher. It's just that it's not ready to do so. I said this area is resistance. Why? I even said it earlier. Bar 5 is a bad sell signal, right? So what did I say earlier? That's a miniature. Even bar 3 is bad. So this area is a supply zone. This is basically the second test. First test sold. They might be trying to get a second sell. I don't know if they're gonna be able to get too much, but at least to EMA maybe. Breakout point 21 high is first area they might want to test, 63.50. And if they do continue down, there's a gap here. That's it, they just test it. You don't get a breakout from a leg in a trading range. Okay, so you have to always remember that. Since bar 8, you know, we're almost in 16 bar, right, range. So I don't care about the tails. Tails are basically, we didn't have any of this when we had bar 22. Everyone was getting ready to buy it. I kept saying, please don't buy it. At least wait a little bit. Now you're saying they're tails because you're seeing what's there, but you didn't see it. It was like this. And many people jumped in and bought it, even though I said it's a leg in a trading range. Well, you're going to have to work on that waiting part, because if you bought it here, that's 8 points. That's with single contract, it's $400. 2 contracts is $800. But if you waited a little bit, you would have still hold on to that $800 or $400. That's a one-day wages for someone who works for corporate America in a pretty high place too. So let's see if the 50% pullback of that leg from bull leg from 20 to 22. Let's see if there are buyers there. So we're right in that vicinity now. But look what's happening on here. So we have double bottom. We tested the neckline, but we could not close a bull bar above the neckline. So the bears want to close that body and maybe come down further, because they do see a double top, micro double top at some sort of moving average and then trying to come down. They might still see a trap here. See that? This would be a bear flag trap. Or we're going to go up again and then sell. So on the higher time frame might be still trying to print a bear flag. You also have a wedge on the 1 hour chart, but it's actually a bear flag in a way. Get rid of that. Right, so we're closer to the last week's high. Bulls definitely want to break out from there and get to these targets, but is this a bear flag? It's possible. So I'm watching what will happen at the midpoint of this hour. If there are any bulls there, we could test and go, but that would still give us a double top and swing down. So if the bears are still swinging this further down, now is the time for them to get serious, take out these lows, and then sell first into this area, sell below it, and then get a measured move target to the downside, maybe to this area. Or fail completely right around 39.55, or maybe even here, because it's the 50% pullback of this leg. So it's pretty difficult because it's midday, it's Friday, okay, and end of the week, price action. You got to break out or break down from the weave up. That's another thing you guys need to remember. That's why I have it here, which I explained many, many times. If you have a violent breakdown, look at that, breakdown, and we separate it from the weave up. The next time when we come to the weave up, they're going to sell it. So that's another reason you do not want to buy. And it's pretty self-explanatory because it says red. Red, we're coming up there, they're sellers. So it's already there in front of you. As we're above it, they bought above the bull closes, highs. They bought it. They bought the pullback and a bull close. They kept buying. But what do you think they're going to do if it's red? If they're under it, they're going to keep selling underneath these bars or at that moving average. So try not to use indicators. They lag, they mean nothing really. Use the ATR. It tells you average how much your bar is going to move up and down. If you're in a trading range, buy underneath things and go half that. Scalp it and leave a runner for the full. If you are in stop order market, you can double the ATR and go 2 times the ATR for targets. So you really don't need indicator to tell you what to do. So we have a bear body 26, no continuation with 27. That's not good for the bulls. We are now look at what's happening here. 20 EMA is above the 1 hour EMA. They're parallel and they're pretty tight to one another. So it's a trading range. So we might be stuck in this trading range for a while. So would you buy above 27? Probably not. Would you sell below 27? It's a bull bar, not a bear bar. Plus, it's a small trading range here. But I didn't sell below it because if you're gonna sell, they already sold below 26, so it's still going down. But one thing I wouldn't do, buy above 27. So it's still coming down. Now the bears made. If you mark from here, that's about, I think, 10 points. Nope. 10 points would be down here. But that's 14 right there. Sorry, not there. A little bit above. So bears move the market more than 10 points. They might take profit here, or they're going to keep selling into this trend line. So they could come all the way down 19 to 20 right around here average. Bears see a bear flag yet again, so they want to break this 39.55. A bear flag yet again, so they want to break this 39.55. And they want to come down and test this area. And they want to come down and test this area. It's also expanding triangle, so it is a bear flag. But we're right at the apex, so leg in a trading range means we come down and test. If they cannot find a breakout bulls, we could come down and test the prior lows, depending on if there are any buyers here. But we are at slightly 50% and below. So this is, buyers are here. I like this to continue down here selling, but I don't know. They have to break here the 39.58 area and continue to sell into 55 before they see actual bulls, I think. So they're gonna try, most likely, selling a little bit further, but it's bouncing here because it's the 14 point or 15 point. Doesn't have to be exactly 15 point. They can start taking earlier profit, 1 point earlier because of this bull leg, because they know there is a bull pressure here. So if you actually measure from there, so they start to take 3 ticks before, okay? Or is it? Nope, not 3 ticks, exactly at 14. Nope, it's 13.75. So they start to take profit there. It's 1 point, an extra tick before the 15 point, but they will get that. They will get the 15 point, which is probably right there. Well, there you have it. They just got it. So that's a 15 point swing, bears, within a trading range. Now, I like to see a little bit more continuation. I like to see 39.55 tested. Can they make it, or is it going to bounce here? Let's see. You can take profit if you sold, or you can hold a runner to test the 39.55. Market is really holding on here. Okay, so I said this area is important earlier. The 50% of Asia, okay, range, and then the midnight open. So that's what those lines are. So you see, we're just testing the Asia mid-level again. We bounced before, we bounced again. Now we're bouncing again. Is this it? Like, this is it? This is all bears can get? I doubt it. I think the bears are trying to break this area and get to the Globex low. But I need a bear body in about 7 minutes closing down here, testing the Asia low and come down here. That's what I want. But if this is good enough, here's the first test, here's the second. Bears are keep selling, trying to sell this. If they fail and we end up getting a big bull bar, that's it. We're going to end up going back right back up. So bears are still in their second sell. They're trying to break this area. We need to break out of one part of the Globex range, either here or there. We're closer to here, so I would assume They might try to break this level finally. We broke the apex of this bear flag. Okay, now we're testing where we broke down. See that? We broke it, we closed it, so we're going back and retest it before maybe selling again. I just have to wait and see. Because these are alternating bars, okay? Bull bar, bear bar, bull bar, bear bar, bull bar. So no consecutive bear bars. We need 2 consecutive bear bars for bears to get, okay, you know, serious here. So I'm going to wait. Because if this is all the bears are getting, suddenly we could get a bull swing. I like to see a wedge, 1, 2, maybe 3, and then the trap of bears, and then swing. Maybe sometime around bar 40, 42, or 42 to 50. So I'm not really excited about buying just yet. But no consecutive bear bars. Like I said, 28, where's 29? They needed to print that bearish. So is this just a pullback and sell again, or is this trap and go higher? I still don't know. It's midday, it's tough, it's Friday. Now, some will say, oh, I see a head and shoulders, inverse head and shoulders. Sure. Then this is a cup and a deep handle, and then we're going to get a measured move to the upside. Do you still know that? I don't know. I need to see set of bull bars getting above high of yesterday. I think today Brad is going to join us. Let me see.
Yeah, Rose, I'm here.
Oh, there he is. You're not saying anything. Okay. Do you want me to? Yeah, I mean, I can wrap it up. Let me know.
You can talk as long as you want.
Okay. All right. 3 more minutes. I just want to see through this because it's such a critical area. I want to see if the bears are going to actually finally sell this into the trend line. Now, if you're counting points before I go, here's a tip for you. Again, I said they're testing the 15 point, right? So in order to sell into the 20 point, they're going to first take profit. They have to close a bear bar right here, 1575. Then they will come down to, okay, 19 to 20 point area, which is starting here and then the 20. But before I see that, after this pullback, that pullback is profit taking. Once the pullback is over and then suddenly you get to see bear bars, okay, fine. Maybe they're going to want to break that 1575 and come down here. I don't see that yet. So that's another reason why I am waiting. And some bears actually sold the 28, all sorts of upset because they weren't probably counting down, up, and down, some kind of a bull flag. And they're going to probably sell somewhere up here to get a break even. Okay, so they're going to have to wait for these bulls to stop buying. So there's that problem. So we're in a trading range. So I like to sell and take profit at these levels and then see what happens, because that doesn't mean that they're going to keep selling. It's just a critical area. This whole thing is a trading range. Okay. So maybe I'll take it like that. So where is the 50% of your trading range? Right there. Where are we? Right there at the 50. So they're having a whole, discussion about what do we do? Do we just go up or make this, break out from here and get a measured move, or do we break down and get a measured move? What do we do? Well, I don't know. They're right there smack in the middle, so I really don't know. So I have to wait for that decision to be made. All right, so I'm going to end my session here. You guys have a good weekend. I'll see you guys next week. And Monday is, wait, today is what? Oh, 18. All right, so Monday is me, and then Tuesday is me and Brad, and so on. All right, bye, everybody.
Hey, everyone. Give me a couple seconds here. I'm on hold with somebody. And I've got to deal with, so I may have to mute it for a few minutes once these people answer. So 2 things. I think we're going to get a second leg up here. I think we're also going to try and reach the high of bar 5. Give me just a few seconds here. So tight trading range, an expanding triangle, and right now we're testing the high of yesterday. I think the biggest thing is the weekly chart. Since it's Friday, the market's deciding, are we going to close below the open of the week or above it? The open of the week is 81, so we're about 20 points below the open, probably will close below it. I suspect strong enough breakout yesterday, strong enough breakout last week that this will be disappointing for the bulls. It's already disappointing. And in the bear bar would just be that much more disappointing. On the daily chart, I've got the Discord pulled up now. On the daily chart, we tested the breakout point November the 1st. We had a double bottom. We broke above it here on November the 10th. We're retesting it yesterday, and we're gapping up. And we came really close to 4,000. About, is that right? Yeah, okay, we came about 8 points within 4,000 and sold off a little bit. So I think we're going sideways in here. This is enough damage that we may get a second leg down, but we're really just oscillating around 4,000. And the market's deciding, do we go up here or do we pull back here? The biggest thing I see is lots of sideways in here. And again, the background noise is me being on hold. I've got it on speakerphone. I need to know whenever they answer. Let's see. So for the bulls, 29, higher low major trend reversal, head and shoulders bottom, left shoulder, head, right shoulder. 3 pushes down, bar 4, 8, and 19. So you may get 2 legs up. Now, why do I think we'll test the bar 5 high? Well, it's a spiking channel, spike, pullback channel. And the reward traders that bought the high of bar 5, they bought, and they'll usually look to buy more lower, maybe above here, bar 20. And typically in a trading range, the market will test higher stop entries. The problem the bulls have is a 5-bar micro channel here increases the odds a little bit lower. So we may have to form a double bottom with 29. And this is pretty common for major trend reversals to go mostly sideways. So expanding triangle here. Let me just draw it. Something like that. And also we're contracting here and here. So it's breakout mode. What are the odds we just break to the downside? Well, it's certainly possible. It is arguably always in short from the open. I think a lot of buying pressure in here increases the odds more sideways. The bears testing high bar 20. 20 was a reasonable buy. We broke above it. We tested the entry price here, testing it again here. So the bulls really need to defend the entry price right here. Bears want a double top, 27.31. The double top tested the 25 entry price right here. And they want to measure move down. It's possible we have to get down to the 19 close. Reasonable sell the close bar, although it's 3 pushes down for 8.19. We may have to test down to this area and let the break even, the sell the close traders out. It's possible also that 8 is the first push, second, and third. What are the odds that the market just keeps trending down all day? Well, I don't think it's likely. Enough buying pressure here to increase the odds of sideways. So even if we break to the downside, probably limited. You know, do I think we'll go below 19? We probably will. We're so close to it, we'll probably have to go under it, probably have to get to the 19 close. However, there's probably buyers down here. This is strong enough to increase the odds that the market is going to have to go sideways in this area. Let me look back on a few days. Kind of like this. Strong enough rally, even if we get all the way back down to it, probably sideways. Strong enough sell-off, even if we get up to here, probably going to have to go sideways. So, wedge bottom. 1, 2, 3. You can also argue that this is the wedge here, which would create an expanding triangle. So we could easily go down here before we bottom. This is the wedge here, which would create an expanding triangle. So we could easily go down here before we bottom. Bar 32, possibly the third push, 24, 28, and 32. So there might be more buyers on the 32 close than sellers. It's a strong enough surprise bar that you may get a small second leg down, a big enough tail 32, and enough disappointment. This close, 32, closed at the low of 28, not below it. That is a sign of weakness by the bears. I'd be more bearish if we didn't have the buying pressure here, and all this buying pressure here, and then all this buying pressure here. This tells me that traders can probably buy up here and buy more lower and break even or make money. And if the bulls can do that, then the bears are going to be less interested in selling down here. So some traders, they buy up here and they buy more lower, maybe below 22, or they wait for a bull bar. Would traders buy above 28? They might. But the problem with 28, I said earlier, is it's a 5-bar micro channel, so some bulls will wait and buy above the bull bar, which would be here, 33. That would be a trend line break here from 29 to 31 and a second entry buy. But the bulls need a good signal bar. The other problem with buying 20 is a reasonable buy. The other problem with 20 though is it's a micro channel. So bar 17 to bar 20 is a 4-bar micro channel. Also, bar 20 is an inside bar, which lowers the probability. So you're 3.5 minutes into the bar, and bar 33 has not gone anywhere. Bar 33 has not gone anywhere. It's only gone 1 point below the close of 32. So there's more traders buying the close 1 point below 32 than selling. So what would I do here? Well, if I had to do anything, I'd probably be looking to buy bottom of a trading range and flat moving average on the 60-minute chart as well here. So probably limited downside and also limited upside. And what would it take for me to sell? I would need probably a strong enough close and follow through at a minimum. But when you look at this, bear bar, bull bar, bear bar, 3 bull bars, bear bar, something's wrong with the bear case. For the bears, they see trend resumption. Whenever you have a major trend reversal, left shoulder, head, right shoulder, so this is a higher low major trend reversal. Whenever you see that, you know the opposite is trend resumption. So the bears want the downside breakout. Good for the bears, becoming strong. Probably sell the close if this bar closes on a flow. However, the issue I have is it's still an expanding triangle. That is a problem for the bear case. So if some traders bought this close, they in theory could have a stop all the way down here. That is my concern. My concern is if this is the trading range, this is probably strong enough for a second leg down. But if it's a trading range, we could just go sideways in here. You have to ask yourself, do like this. I'll just do like this. Why is this bar pulling back so much? And the reason is traders are scalping out below the lows of 19. They're not confident that the market's going to go far below 19. They were confident price was going to get to it and maybe go a little bit lower. However, they're less confident here. You have some bulls who bought the close of 19 or the low of 19, scaling in lower, trying to get out break even. Possible this is the second leg from this. Leg 1, pull back. Leg 2 takes you somewhere down there. Sell the close, probably going lower, but big bar, best looking bar since bar 1. So there might be more buyers down here than sellers. What do I suspect bar 35 is going to look like? I suspect it'll look like a bull bar. But this is strong enough that you may get a second leg down. Whenever you get a climax bar, a breakout that's much bigger than the other bars, it increases the risk of a deep pullback and possible reversal. Traders buy above the first. If this bar closes up here, will traders buy it? Maybe if they can use a really wide stop. Otherwise, most people should wait for a second entry, which means you may get a second leg down. So some traders will sell the close, betting that the market will go a little bit lower. My problem with that is look to the left. You're buying fairly low here to here. So that's probably 30, more than 60% of the way down. So here's 50% pullback from the 72 low. I've won. Here's maybe 66% of the way down. It's not quite, but it's close. So if this is such a strong bar on bar 34, why are traders not selling eagerly into the close? That's because they're uncertain. They're worried it might be an exhaustion bar. And if they're worried it's an exhaustion bar, some traders will wait to see the follow through. Yet some traders who bought the 19 low disappointed with this bar 34. It's similar to bar 30 here. However, it's a little different. What's different about 30 yesterday and 34 today is 34 has been clearly trending down. And this is the trading range and this is the breakout. However, because we had this leg one, it increases the odds that this may just go more sideways here. This is clearly breaking out above all the bars to the left. But still the same problem here. We went sideways for this many bars. So what's going to happen over here? Probably sideways. Because bar 20 was a reasonable buy, bar 5 is less reasonable. Some traders may take it. The problem with bar 5 is fairly tight channel, strong enough bar 1 and 2, that you may get a deeper second leg than what bar 4 was. So that lowers the probability in bar 5. Bar 20, though, is a reasonable buy. Get a wedge bottom, 1, 2, 3, 2 legs down in what looked like a trading range day up to here. So it's reasonable to buy this bar. Because it was reasonable, we could easily get back to the bar 20 low if the bulls can get more buying pressure here. At the moment, the bulls have not done enough. That's why I said it's sell to close. So follow through 34, probably going at least a little bit lower. But the problem the bulls have is, the problem the bears have is sell climax bar. We could easily test down to the 72 low, 72 high here. We could get 2 legs down. This trading range will influence the market though. So notice right here, traders that waited to sell the set to 34 close, if they waited for follow through, they in less than 60 seconds have been able to buy to sell at a better price than the traders that sold to close at 34. This is not what you want to see if you were looking to sell closes. If you didn't sell here, now you're going to sell at a better price, and you got to wait and see the follow through. You have to ask yourself, does that make sense? Bears that did not sell in here, if this was truly going a lot lower, they should be forced to chase the market down. When I look at this, it's confusing. For the bulls, if I'm a bull and I want to buy, this is too much selling pressure. I don't want to buy it. But if I'm a bear, I'm worried. 2 legs down. Typically in a trading range, after 2 legs, the market starts to go sideways, and there's a lot of buying pressure here. So I think right here, the 20 high buy signal bar is a magnet. Makes me think we will have to get to here. You know, it's really, this happens all the time. You know, just pick a place where traders will do something reasonable and then enter more, will double their position on a stop entry. I'll draw this back in a second. Trying to clean up this chart a little bit. So even if you bought the close of bar 1 and you wait for a stop entry, maybe 20 or 21, break even's right there. So even if you probably bought the 22 close and bought more above the bull bar, I don't know if this will be a good buy. It's a micro channel and it's a big bar, so it may go sideways and form a second entry, but break even takes you right to the 20 high. So why do I sound more bullish than bearish? It's because I am more bullish than bearish. I don't want to see this. I don't want to sell after 2 legs down in a trading range with all this buying pressure. My biggest problem is right here. Sometimes I'll go back on prior data. This is my biggest issue for the bear case right now. This is a lot of buying pressure. And while we could easily go sideways here and pull back, I think we're going back in this range. Yeah, Ray Game, sorry for missed your question. It's a reasonable buy. Ray Game's asking about bar 21, this bull bar. That's why I have it marked right here. And my 21 is a credible buy. And a lot of traders, whenever they have a credible buy signal, they're assuming the market's worst case trading range. It's a wedge, as you stated, wedge bottom, lower half in a trading range. It's a reasonable buy. Whenever you do something reasonable, there's a really high probability that you can enter here, wait for a stop entry like a bull bar, and buy more lower. So a lot of traders, what they'll do is they'll buy one micro here and then 2 micros above a bull bar. And what that does is it lowers your break-even price even further. And this is also common in a trading range so let me back up here. Part of the reason why traders, you hear Al talk about it. A classic example is, let me just go back. Sell this close. I don't want to do that. I don't want to mislead people. So let me find a simple one. This works, even though it's late in the channel. You buy up here, and then you just wait for a bull bar like here, and you buy more above this bar. The odds are really high you can get out and break even. And the reason why it's better generally it's better to enter on stop entries for most people is if I buy a position, if I bought here and I wait for a stop entry, none of these are good, and then I buy more here. Even if I just bought one position and then a second position, my break even gets greatly reduced. If I bought one position here, so 1 contract and then 2 contracts, my entry is going to be here, break even better. So big move down, but strong reversal up. Some bears sold this high, bar 35, disappointed 36. They'll probably use 37 to try and get out break even. Now what do you have? 3 pushes down. 1, 2, 3. So what do bears do above 36? I think most get out. This was my issue with being short down here. 34 is a big bear bar, so big risk. You really want breakouts to be orderly. And the other issue, let me just go to I'm going to keep talking, but I'm going to pull up the encyclopedia for a minute. So Ray Game, did I answer your question if you're still listening? Cool. Trading ranges are very, the whole point behind that is trading ranges are very forgiving because they allow people to scale in. And because of that, ignore my typing for a minute, I've got to log in. Because of that, traders do exactly that. They use wide stops and scale in. And one of the best ways, while I'm pulling this up, one of the best ways to get comfortable with that is to practice it. You even go to Forex markets. I think they're great markets, especially if you can trade, 60-minute charts. They're really good markets. I can go to, I think a good example here. Well, I'll come back to that, but either way, the point behind, I'll come back to that. I don't want to get too many thoughts here. So let me do this, pull up the encyclopedia, thoughts here. So let me do this, pull up the encyclopedia. By the way, you can see, so pay attention to the 35 high right here. What are the bears going to do that sold the high 35 and more higher? I suspect most of them will be disappointed. Probably going here at a minimum. 3 pushes down. We also may get to the 32 high at a minimum. So go back to here. That's the wrong screen. So take a look at this chart right here. Trend from the open. And we gapped up sideways. Not that many consecutive bull bars. Not even 3 consecutive bull bars closing on their highs. Sold off the whole day. Same thing here. Here's 2 consecutive bull bars. Here's 2, but this bar could not close above the prior. This bar closed above the prior, but it's a doji. Here, 2 consecutive bull bars, but 3 here, but big tails, big bear bars, and then sideways, 3 bars down, another big bear bar, more bars down, big bull bar, lots of bears down, bear bars down. Compare that to right here. Give me 1 second. So where are those big bear bars? And better yet, this is too much buying. Here, so look at 20 through 22. Now let's compare that to anywhere over here. So let's look at, so at a minimum, probably going to the 34 high. And the bulls, they're going to make money at the 19 low, which is not, and I may have been saying bar 21, I meant bar 20, so I apologize about that. The bulls, some bulls buying here, scaling in, they're selling back at the 19 high, back at their original entry. Yeah, again, that makes sense. Another reason for 36 is if you buy the close of 19 and you buy more, maybe above at the close of 34, this is break even. I would not call this a small pullback bear trend. Cipher CYPRTODOC, if that's what you're referring to, I would not. I think it's a trading range day. And trading ranges are notorious for going sideways, breaking out to the downside, and then reversing. Yeah, break game, I think that's okay. I wouldn't start out with scaling in. I think it's important to understand what scaling traders are doing. And the reason for that is it's important to understand that most of the time, scale-in traders make money. Traders buying these lows, buying here, scaling lower, they make money. And also, most of the time, they can avoid a loss. Traders buy the 24 low, the 25 low, they buy more, maybe below 26, they get out break even here. Or they buy more below 27 after the second leg down, and they get out break even here. So 2 legs up, micro channel since 36. Disappointment though. You have a big sell-off, big rally, may go more sideways here than just straight up. Is this the B bottom if we go down and reverse? Not really. All of these reversals are attempts to reverse the market. And the bulls tried here, the bulls tried here, they tried here, they tried here, even here or here, finally broke the downside. But all of this is a magnet. And the reason, the more areas of resistance or support in here, when the market breaks out to the downside, the more traders will be trapped. And if a lot of them look at the market and agree with the trading range, they're just going to buy more lower. It's different than something like this. Rallied, open gaps, rallied here, open gaps. Because this looks like a leg in a trading range, and then it breaks to the upside here with all these gaps here and here. It forms a small pullback trend that can keep going up a long way. This is different because there's just so much buying pressure. That doesn't mean we're going all the way back to the open of the day. My expectation is somewhere around 39.60. So the 20 high, somewhere in here is my expectation. And because that's the apex of this trading range. So bear bar closing on its low below 39. Will traders sell it? Some might, but after the 4-bar micro channel and the closing of the gap below 19, there might be more buyers below 39 than sellers. So that lowers the probability of the sell. Some traders will argue that it's 2 legs up, leg 1, pull back, leg 2. But I have to say, I'm suspicious of all the buying pressure here. Even if we pull back down to here, I think the market will have to get back in this area. Yeah, DAR, GER, AK, I don't know if I answered your question. But inside bars, they're triangles. So they're a lower probability because they're trading range bars. It's kind of like, this is the triangle. Inside bars are contracting triangles. So it's breakout mode. Here, it's a second entry buy. But the problem with it is the channel down is so tight, and you may get a second leg down here. But in general, an inside bar is a trading range bar. So bear breakout, bear flag, 36 to 39. Trading range day, you always have to wonder about the possibility of here, an upside breakout of bear flag, which takes me to the 31 high, which is another target. There's also a gap, 24 low, 31 high, so may have to get there. Yeah, I agree with Rose's comment. She's saying that this is too tight of a channel down. We've been channeling. This breakout's too strong, that buying above here is not ideal. And I agree, because for most traders, buying on the way up, they're buying betting this gap's going to close. So most of those traders are buying. It's a limit order buy. The stop order buy is not that ideal. And it's a more difficult trade because the risk is big. So a trader that is buying here, that's why I made the comment. I think we're going back to the high of 20 because traders typically will buy, and if they held, they buy more above the bull bar. The hard part with that is, do you buy above this bull bar? Probably not. It's not ideal. Therefore, it'd be better if we tested lower and formed a second entry. Oh no, I never wrote you were agreeing. I was just clarifying. But yeah, either way, this was traders are buying on the way down, betting this gap closes. And also, you have an open gap here, bat signal bar above 35. Therefore, a lot of traders would set limit orders back at this area, betting the gap closes. So you wait for the rally to close the gap, showing the sign of strength for the bulls, and then you try and buy the pullback, maybe right above the 35 high over here. So if you do this, so if you try and buy the high of 35, maybe 2 ticks above, that would be 7.25, 7.25. And you can see price went to 1 tick below your entry. So now we have a pullback on bar 40. Some bears would take the chance selling below 39, betting that the market would sell off and break the downside. And if they took that trade, they're selling after 2 legs up. They would likely exit pretty quick when 40 closed as a doji, which is in part what's going on here. Not ideal for the bulls though. It's a doji bar, high one buy, just under this resistance level here, this red line. I think it'd be better for the bulls if we could sell off down here and then form a double bottom. And then we'd have a better shot at breaking out to the upside and going back into this area. So selling off back to the 34 close and 35 close. You can see a lot of bears taking profits back at these lows. We're buying back shorts. Some traders sell, scaled in higher, getting out of the original entry. Buying back shorts. Some traders sell, scaled in higher, getting out of the original entry. If the bears are going to be strong, they need to close below 36, but this is the same problem as over here. It increases the odds that the market's going to convert into a trading range and go up into this area. So 41, not what the bears want to see if they're selling closes. Imagine you sold 34 or sold 35 and sold more below a bear bar, hoping, let me back up, you sell the 34 or 35 close, and you're thinking, okay, finally we're going lower, we're going down here. And then you see this and you're thinking, dang, maybe I should get out back to my original entry, 34 or 35 close down here. And then the market sells off. You had a brief window here, and then this is happening. Are you going to hold, hoping that the market's going to get back down to here? Or are you just going to say, screw it. I can't risk all the way up to here, so I need to get out and minimize the damage that's being done here. That is what I think is going on. The market's deciding, can the bulls break out to the upside? And will the bears give up? If they do, we can easily get to this area or even all the way up here. This will be a stretch. I think the obvious is here. It's not that far away. But maybe if the bulls are lucky, we'll get a breakout, something like this. But the bulls need to show signs of strength here. This. But the bulls need to show signs of strength here. And right now, we get a 5-bar micro channel, so it's not ideal. But it's still a second entry and a second failed breakout of the 19 low. So it's an okay swing buy. Other bulls who bought above 20, instead of buying more above 36, they might be willing to buy now above 42. So I'd get out above 42. If I was short, I'd get out above 42. I like what Metal Mike in 526. This person said they shorted one tick below 35, and I get it, breakout follow through, reasonable, and then they stand again below bar 39, and they broke even on the trade, so they sold below here, got out around there. I think it's reasonable. Again, I said over here, 34 is a problem, and it's a problem because it's very climactic. Just look how big the bar is, and compare it to all the other bars. Climactic bar here, sold off, rallied. Big bar, went down a little bit lower, rallied. So in a trading range, climactic behavior is really common. Big bars, lots of overlap, and it causes the market to go more sideways. Bears trying to get a second entry short below 43. It's a breakout pullback short below and a retest of the 39 low, but a lot of overlap makes me think we're going up here before we go a lot lower. It's very common to think trading ranges are just really unfair, and it's unfair that people they scale in and use wide stops and scale in, but the reality is, nobody really wants to trade that way. Nobody, it's difficult. It's human nature to want to sell closes, sell as it's going down, buy as it's going up, and the reality is that just does not happen that often. And the longer people trade, the more they start to realize they can use wide stops and scale in. And what it causes, the frustrating thing, is it forces people to trade smaller. But what they learn is by trading smaller and using wide stops, they begin to stop taking so many dumb trades. And in other words, stop selling at the bottom of the trading range. But I'll talk more about that soon. So we triggered the buy above 42. If the bulls are going to do something, if they're going to get a strong breakout and get up to here, they need to show signs of strength. They need 43 to be a strong bar. And 43 closes above 42, and it closes above 39. Let's see, we're 4 minutes into this bar, and the bulls haven't made any money, so that is not ideal, and that's a warning that the market may not go much higher. And if it does go much higher, it may just go up here and stall. So a doji, a perfect bar, a bad short below, but not a great buy above. That is more confusion, which tells me that more trading range price action is to come. Part of my comment about Forex was it's a great market to learn how to scale in. And the reason is you can risk pennies. So if you go to a 60-minute chart and you see this over here and you look and you say, okay, strong bull bar, I'm going to buy a 50% pullback, second leg up. Big bull bar, buy the close, 3 legs up. You get this big tail, maybe you sell up here. Or you see consecutive bear bars, strong enough for a second leg, you get this strong big bear bar here, and you buy the close. Or let's do it like this. One thing you can do, and the point is you can just use really wide stops. It's really easy to buy this close and put a stop all the way down here, and use a wide enough stop to scale in lower. And Al says this all the time, and it's really important. You have to learn how to be willing to trade small enough that you don't care. Because if you care, you're going to screw it up. And anyways, the point is, big bear bar. So maybe you're looking at this and you're saying, I don't want to necessarily buy this close. Well, 3 o'clock. I'm sure this was this was like 2 days ago. So it's 1 p.m. If I go to, I'm going to go to this day. We're going to do this. There we go. And I'm going to go to a 5-minute chart and go to the 15th. There's the 15th. So quick pushes down, sell climax, second leg down. There's a bull bar. Maybe you buy above this bar. And you could use a really wide stop. And then you get 3 consecutive bull bars, 4 consecutive bull bars, and strong enough breakout for a second leg. Maybe move your stop to here. Or maybe you can trade on the 15 now. And see strong breakout, second leg. Maybe you buy this close, buy this inside bar, or scalp. But the point is, Forex markets are great for taking higher time frames and being able to scale in. So if you don't have time to watch all day, you can trade a 30-minute chart, couple legs down, buy that close, scale in, get out break even, buy this close, wide stop, maybe scale in 50%, get out for a second leg. And I know people aren't fans of Forex, and part of the reason they're not a fan of it is because they claim it trades differently, and it moves faster. It goes sideways for longer periods of time on a 5-minute, and it can move quickly when it moves. But if you're trading and again, this is what I talked about, so I'll talk about that in a second, but if you were listening over the past little bit of time, you know that I've been saying we're going back in this area. But the great thing about Forex is, for one, it teaches you how to see markets all the same. This should not be any different than E-mini or anything else you look at. But if you want to practice scaling in, you can put $50 in a Forex account and just trade fractional units and just risk pennies. And you can buy, scale in lower, scalp out. You can sell, scale in higher, scalp out. Great way to learn how to trade. So what's going on here? Well, what I talked about. Second entry buy, traders gave up. This was a bad sell. And because of that, as soon as traders saw this bad sell, they said, I'm just going to buy the close. Why would they buy the close of 43? Because it's a bad sell. Instead of, if it's going to be a bad short below the bar, that means traders want to buy the low of the bar. And if it's too obvious of a bad sell, it's probably not going to trigger. So where's another example? It's kind of like, let me find one. It's like right here. I mentioned over here, the bulls wanted a second entry buy, and after 32, but 32 is a strong enough surprise, you may get a second leg down, and we may have to get to the 19 close. Well, when 32 closes a bear bar, the odds favored a small second leg down. And instead of traders trying to sell a pullback, they just sold the close and went straight down. So 4-bar micro channel, 20 high, just above, probably going to get to it. Next target, measure move up, and a test of the 31 high right here, as well as these lows. You have another expanding triangle. 1, 2, 3, 1, 2. It's really common to get patterns kind of nested. So you'll get a day with a lot of expanding triangles nested inside of smaller expanding triangles here, here, and here. So would I sell below 45 if it's a bear bar closing on its low? I would not. It would be 2 legs up, but I think we're going a little bit higher. You know, I mentioned how traders would buy this close and maybe use a stop and measure to move down. And you can see the traders that did that, they didn't get stopped out. And I think one of the biggest challenges traders face is, and it's hard to manage this trade. They'll do something reasonable, like buying 22 close, and they'll put their stop right below 19. And the problem with that is if they cannot get out really quickly, like below this bar, maybe below here, what happens is they end up taking the stop. They take the loss right below here, and they cannot re-enter. And that's really challenging. You know, it's the same thing as selling the close of 19, not a great sell. And instead of getting out above this bar, they get stopped out right here or here, and they can't get short again. Oliver asks, hey Brad, when using a wide stop in a trading range like this, do you use an amount of points for a stop or maybe a measure move based on the height of the range? I just use in between. For me, if I try and make sure I'm trading small enough to where the stop is tolerable. And for example, if I'm holding through this breakout, maybe I bought here and I'm holding through this breakout, and for 2 parts. If I exit here or exit on the pullback and take a small loss, let me back up. I will use the stop generally wide. And, what's wide? Wider than this. Most traders shouldn't do that. And the problem is you cannot, let's use an easier example. I think this is more practical. Let's say traders are buying with limit orders down here. You cannot put a stop a few points below the leg low and call that a wide stop. What's a wide stop? Probably something like this down here. And you really need to be able to scale in lower. So the wide stop concept is really subjective. That's why I'm giving a pretty vague answer, because I think most traders, when they use a wide stop, they will exit based on the price action. So they're never going to let the stop get hit, but they're going to manage it in a way that is reflective of the price action. So I hope that helps, Oliver. You know, I would say, I think the better, Oliver, between the two, I think I use more price action stops than points. So what I mean by that is kind of like what I showed there. If I want to put a wide stop below this range, ideally, you know, something like that. So my stop would be somewhere in this area. Or if I'm buying, if I want to buy the close at 34, betting that it's going to reverse, and notice how we tested it and we're selling off a little bit, I would use this stop maybe a measured move below the bar. So here's the bar, stop somewhere down here. So what happened here? 2 legs up, testing the high of 34, and we're selling off. So some traders are selling here. You have other traders who sold the close at 34, sold more at the high of 34, and they're probably going to exit break even right here. Yeah, Oliver, that's a excuse me, that's a reasonable trade. And the only challenge with that trade is you have to be comfortable with the risk as well as knowing when to exit. But the great thing about, excuse me 1 second. The great thing with using a wide stop and buying more on a stop entry instead of just buying one pieces is that you drastically lower your entry price. You know, it's really dangerous to buy above 20, buy more at 20 low, and then buy more here. You know, because you can easily get something like that and it can startle you out of the trade. Whereas if you buy it here and one waited for this and then saw the reversal, they'd be more comfortable looking to buy again down here. So that's why I'm also a big fan if you can. And it's something I kind of just picked up from Al, where he'll do 1, 1, 2. So one lot above here, one position size, one contract maybe, another contract below 20 or below 19, and then he'll buy 2 contracts above a stop entry. And what that does is it even, you know, you're doubling your position above the stop entry, which is greatly reducing lowering your average entry price. But again, you have to trade really small to do that. Yeah, Oliver, that makes sense. And, you know, obviously you know this, but part of that is it's really hard if you're buying and scaling in and, you know, percentage points, scaling 1 point lower, 2 points lower, 3 points lower. It's really hard emotionally to exit the trade when you need to. But if you're just in one position, you're in your smallest position size, and then you're waiting to buy above a second entry buy, the loss would be, even if you did get out, the loss would be a lot smaller because you're waiting to enter on your second position. The challenge is to make, you just have to make sure you're in a trading range. And what a lot of traders do, and I make this mistake all the time, is instead of getting out, a lot of traders like Al, they will get out quickly, take the small loss. So if they bought one position here, one contract here, they would take the small loss below it, hypothetically. Or better yet, if they bought these lows and then the market starts to go down, they may just take the loss on this bar. So if they bought one position here, and then when this bar shows up, they're flat, they might buy a second entry above this bar. Okay, I'm back. So we reached the target, and you can see we found sellers. That's good for the bulls. Wedge top, 38.44 to 49. 1, 2, 3. We also tested the 31 low here. What do bulls do? Do bulls get out below 50? I think some will. Yeah, this looks like a leg up in a trading range. And we might go down for a few legs, maybe test the 47 low. before we go much higher or lower. I'm going to answer a few of these questions above. If Luke asked, Brad, getting back to the stop loss question, did you say you would get out of the trade based on price action? Question mark. Yeah, I'd get out based on price action. The measured move, the stop and measured move down is just a stop. I would get out ideally before then. You know, when you use a wide stop, you're just allowing it time to think, but you have to know when to get out. So breakout, bad follow through, breakout, and I said over here on 43, this is a warning. You know, go back to what I said here, warning that this is a trading range. And look where we are. We're pretty close to, you know, the 43 close is like right here. So we're right back to it. That's why a lot of traders get out. Multiple pushes up, 1, 2, 3, expect a few legs down. You know, probably, I suspect the day is going to remain in trading range and go mostly sideways. Sorry, guys. Thank you. I realized my mic's been off this whole time. It's a little frustrating. So let me back up. Zzw.订单, can you clarify your question about percentage of breakdown after 3 pushes up? Typically 75% chance after 3 pushes you get 2 legs down, but if you could clarify, I'll be happy to talk about that. So 3 pushes up, wedge, we reach my target, the 20 high over here, and I mentioned that there was a wedge, and most bulls get out below 50. Why? When you have 3 pushes up, especially in the trading range, better to get out and look to trade again. And what's going on right here is we're testing 34 and 35 again. Remember, the trading ranges are very forgiving. So traders selling 34, 35, they sell more below bear bar, like 50 after 3 legs up. The reality is they're going to make money, and they're especially going to avoid a loss. Strong enough breakout, 50, 51, probably at least a second leg down. I said over here, second entry buy 42, but 1, 2, 3, 4, 5, 4 bar micro channel, big bull bar, lots of overlap, and the entry bar on 42 is weak. So you guys should be able to hear me now, and if you can, please say something. But I'm assuming everyone can hear me right now. It shows that my mic's working. But 43, cool, awesome, thanks. 43 is a doji, and I said over here that 43 is a warning to traders that we're in the trading range. Bad, remember, when you have something confusing, 43 is a bad entry bar for the bulls, but it's a bad second entry short for the bears. And when you get that, it's a little sign of a trading range. And you look over here, you can see we tested it here, we tested it here. So at this point, what I'm seeing, again, another wedge, another expanding triangle. After this many bars down, I don't want to buy, probably going to get a second leg down. Dean0707, to clarify, is it a reasonable trade setup to go short? As I just keep watching it happen. Dean, are you talking about bar 50 right here? By chance? I'm not exactly sure. Cool. Yeah, I mean, traders will take that trade. Remember, when you get 3 pushes, most legs, it's important to count legs. And, let's just count here. So count how many legs it takes before you get a reversal. So here's reversal 10, 1, 2, 3. And then you get kind of 2 legs up. Tight enough channel, though, that it might be 1, 2, and 3. So whenever you get 3 obvious pushes, especially when there's resistance above, you can expect a 2-legged pullback. Now, it's hard to take this trade because, again, a lot of overlap. Whenever one other way to tell you're in the trading range is look at the signal bars. There's usually always something wrong with them. Look at this one over here. 1, 2, 3 pushes down, bull bar closing on its high, but after a very extended micro channel, and then it reverses. So it's always in short, probably below 50. Strong enough breakout, 50, 51, probably a second leg down. But 52 is a weak bar and a warning that we may not go much lower. We have obvious targets below, and we're near that area down here. We failed around 40 and 42. We're probably going to fail down here. So if I'm looking for a major trend reversal, we had one on 42, but somewhat minor. It was reasonable, though, because of all the buying pressure here. So now we have a trend line break based on this sell-off. Here's the trend line break. Here's the retest. My problem with this retest, though, is it's a lot of selling pressure. So that increases the chances that we may go more sideways here. I think first reversal up will fail, and traders will need a double bottom. Am I willing to sell the first reversal up? I don't know. My concern is, while I think the selling pressure is good, my concern is all the buying pressure down here. Sometimes it's helpful to look at the SDS, which is the inverse of, let me do it like this. Let's go over here and look at the SDS. That's the inverse of the, the inverse of the S&P. So consecutive bull bars, buyers below, second leg up, expanding triangle. Right here. Strong enough breakout, 3 pushes down, testing this gap, probably going to get to the close of this right here. So I like to look at the SDS as kind of an opposite case, just to make sure that my logic is reasonable. Probably buy the close in here. Odds are you're going to get a second leg and probably get to here. Do I want to, would I buy on a stop above this range? Probably not. We'll go back to here. Traders that sold the 51 close, 49 even, price went to 36 even, so went exactly 5 points down, or 7, 6 points. Yeah, sorry, not a lost mic. So traders sold this close, 49, and the low of this bar is 46. So it went 5 points lower. Give me just a couple seconds here. Okay, so one thing. So 49, someone asked, M plus M plus, signal bar 49 was bad, but I took the trade. So you sold below 49, and while I'm talking about that, traders will buy here and scale in, even though the third push up, not ideal. Signal bar 49 was bad, but I took the trade short below 50. So you sold below 50, it's reasonable. Because it was 3 pushes up, top of the bear channel, reasonable. So I made a judgment call based on context. Yeah, it's reasonable. 3 pushes. Trading range is always very common to have bad looking signal bars. My problem with here and selling above here is I don't want to sell low in the range. This could be 2 legs down. Leg 1, pull back. Leg 2. So, whenever you get climactic bars that are not uniform, it increases the odds of more sideways. This right here is kind of climactic. So I hope that explains it. Let me see here real quick. So probably sellers above 53. But, low in the trading range, and we could easily get a bull bar closing on a tie. That test somewhere up here. I still think 2 legs down at a minimum. I think we will get that. But, as a rule of thumb, I don't want to buy too low in a trading range. Trending trading range day. Trading range here, bear breakout, trading range here. So now you have to think about the midpoint. is basically going to be somewhere in here. Is this a higher low major trend reversal or a truncated wedge? 8 being the first push, 36 second, and the third push here. Maybe. You know, my problem is I think it's trading range. So I'd be more confident of a reversal here if it wasn't for this. This makes me think we'll have to go sideways and then form a double bottom. I would rather the market form a double bottom down here, but I want a good signal bar. So again, I know I've talked about it, but I'm a big fan of looking at Forex markets. And the reason is you can just trade really, really small. And, you know, ideally, if you can trade the SPY, that's even better. But low in the range, 3 pushes down, 1, 2, 3, traders buy, betting on a reversal up. Just go somewhere random. So double top, 3 pushes up, strong enough trend line break, maybe sellers up here, so trading range. And traders will buy below bars. But, you know, the good thing is you can use really wide stops. So if this is the bottom of the range, traders can buy, scaling lower. Traders can buy above here, use a wide stop. And if they bought that, they can scalp out here, strong enough breakout. You just buy the close, stop down here, and you just hold. And deep pullback, but then you get a big bar, so you take the profits. And then you get strong breakout here, 2 legs up, but strong enough breakout, probably at least a small second leg, even though it's 3 pushes. So if that do anything, probably buy the close, betting on a second leg, and outside down. But either way, you know, the range here is really big. So maybe it's about 10 points. It's about 50. Yeah, it's about 50 points. So either way, really good range. I don't want to get too distracted here. So 50% pullback based on this, part of the reason why I didn't want to sell down here. And I still think we're probably going to go back to this area. Right now, this is looking good for the bulls, and we're erasing all of this. This is why I didn't want to sell low in the range. So what do you do if this bar closes on its high? Well, at that point, it might be buy the close. You know, so far, the bulls are doing a really good job. Bulls buy this low, scaling lower, getting out. What's going on right here? Well, some bulls are getting out. You have bears selling right here. They're selling, betting on 2 legs down. Bulls buy this low, scaling lower, getting out. What's going on right here? Well, some bulls are getting out. You have bears selling right here. They're selling, betting on 2 legs down. So they sold 56.25. They may take profits at 2.25, which would be down here. Consecutive bull bars, 54, 55. Big down, big up. I don't know. 54, 55, strong enough for probably a second leg up. Probably will get up to here. But the pullback could be deep. You know, probably buyers below 56 and at least a second leg up. So some traders will buy the 56 low, betting we'll have at least a small second leg up, and we'll probably get above 50. So let's try to get the second leg up here. I wouldn't be at all shocked if 54 is a successful higher low major trend reversal. so far 54 and 55 is good. And you still have to wonder if we've gone high enough here. So we could easily get up in this area. Okay, I'm back. It's actually one of the things I did is actually bought a low of 56. And I was going to buy 56, pretty much 3 points lower. And typically when I'm uncertain, I'll buy one position. So one, for example, one contract and then one contract. And then I'll wait for a stop entry and buy two contracts. And I had a target somewhere up here. And I think it got hit pretty close, but long story short, I was confident we'd get a second leg up, especially with it's a 4-bar micro channel and the odds favored at least a small push up. I was not confident that we'd get, the second leg I figured could be brief. So, basically a few points above this high. It's basically going for 5 points. So I bought this low at 925. So I actually got pretty lucky. Let me see here. It was, so I pretty much got filled that really lucky. So bought the low of this bar, 425, got out at 925, and then went to 950. So what would I do if my target didn't get filled, started turned down? I'd probably just get out, like here, I'd probably just get out at my break-even price and just move on. And the reason for that is my premise would be invalid at that point. My premise here was I was buying this, betting on a second leg. Well, this is the second leg, mission accomplished. So on a 1 minute chart, there's a second leg that meets the minimum. And that's the difficult thing about scalping is if I'm swing trading, I buy above this bar, stop below. I can go to Walmart because, as Al says, and the reason is I can hold for 20 bars. If I'm taking a scalp, my premise might be as simple as a second leg up, or, I'm buying down here betting that bulls will take profits. Well, my premise has to be quick, and it can quickly change. When you're going for a scalp, you have to be aware that it doesn't take much for your premise to change. And because of that, you have to be really quick to make decisions. Give me just one moment. So now we have an inside bar on 58, 59. Second entry buy. Do you buy above it? Well, the problem with buying above it is it's an inside bar. Give me just 1 second. All right, all, I'm back. So 3 pushes, 1, 2, 3, testing a high of 50. Probably sellers up here. Lots of overlap. And, for me, I'm interested in 56. I'm happy to buy after this. I'm less willing to buy after all this. For me, it's a trading range. 3 pushes up. I don't want to buy after 3 pushes, especially at the top of the range. I want to buy after 1 push when I think there's going to be a second. It's really important to not get too eager to want to trade. And multitasking here. There we go. Outside down, so 61, probably a couple of legs down. Bears sold the 63 high. Guess what I'm going to say? It's reasonable that they'll make money. It's important not to get too eager right here. And, it's so easy to be hopeful we're going to break to the upside or the downside. And the reality is we're probably not. It's probably going to continue sideways. If I had to pick a direction, I think we will get closer to the 53 high, and allow the bears that sold and scaled in to make money. And if I was taking that trade, the way I would manage it is, in general, sell above 53, maybe sell a few points higher, three points higher, or maybe a size, it's kind of the opposite of this trade right here, actually. Or no, of this trade. I would sell the high of this. I'd probably sell more a measured move based on the bar, so somewhere up here. And then I'd wait for a second entry short and wait to sell. This would be so close to my second entry that I wouldn't take it. So, if I was going to buy this low, which is a trade I did take, I would buy this low, which I did. I would use a stop somewhere just down here. But I'd buy this low. I'd buy more a measured move down at this bar, which would be somewhere down here. Then I would wait for 2 legs and look to buy a stop entry. And I suspect that's just for me, that's just kind of an easy default way to manage the trade. But let's look at it like this. So you sell here, sell more here, and I don't know if that might be high enough to where it could be reasonable to sell more there, which would mean your average entry would be pretty much the high of this bar. So if you sold 1 position here and then 2 positions here, you'd already be out break even there. Would I be disappointed enough to get out break even? Probably. Yeah, Jake C makes an interesting point about scaling in, and you really should treat them kind of as separate trades in a way, where I kind of see that as your premise. The premise needs to match. The premise still has to be valid in order to take the second trade. If the premise is no longer valid, then it doesn't matter. You get out of the trade. So why do I think we're going to the 53 high? Well, we're in a trading range, and typically in a trading range, the market will retest an obvious, it'll retest bad signal bars. Trading ranges are very forgiving. That's why I was willing to trade the first leg. I don't want to trade the second leg. I want nothing to do with buying in here. And would I sell up here? You certainly could. But trading ranges, especially in the range that's like this, I want to be extra cautious and take good trades, take sensible trades. So the market's starting to stall and go sideways. A lot of bear bars, lots of overlap. I mean, just look at the past. Just look at the past 10 bars. Very confusing. I think we're going to try and get down to here, but strong enough breakout. This could be a pullback, and we could easily get a second leg up. So better to be careful and not be in too much of a rush here. All right, we may not get down to the lows right here. So probably a second leg up, leg 1, pullback, leg 2. Spinning triangle now, and probably going to go sideways in here. I'm hesitant on what to say because I'm confused, and it's not clear, and that's okay. I don't want to sell too high. I don't want to buy too low. I also don't really want to. I think there's too much risk of an upside or a downside breakout. And I want to use wide stops and scale in. And there's a few things against me on that, and that is, for one, time of day. It's getting late in the day. And the other problem is we're in breakout mode. If I sell up here and then we get a strong breakout, I don't want to get trapped into a bad trade or trapped into a losing trade. And for me to buy, I need to buy down here. So I am trapped out. I think it's reasonable. I think the bulls are doing better than the bears. We're getting more bull bars closing above their midpoints, and lots of buying pressure in here. So if I had to pick a direction, I don't know. I guess I'd pick long, maybe stop below here, but it'd be a low probability trade. So, maybe buying above here, stop below here, but I really don't want to do that either. So if we're lucky, maybe we'll get 2 or 3 consecutive bull bars closing on their highs. So maybe this bull bar and another bull bar, and then we'll break to the upside, maybe test the 22 close. But right now, hard to say. It's so easy to look at this. Here I am talking about buying, and in 2 minutes left in the bar, we could close on our low, or on the low. So, just look at the moving average, flat moving average, and we triggered a buy above here, went below this bar, went above this bar, triggered the sell, we triggered this buy. Very confusing. Your goal as a trader is to make money, not to take trades. That's the one thing you learn the longer you do this, is you can spend all day trading only to give it all back at the end of the day, and you don't win based on number of trades. You do not get rewarded for being in front of the computer and trading. You get rewarded for taking good trades. And that's the one interesting thing about trading. And we've all heard it, we've all thought about it, that you can work as hard as you want. What matters is the quality of the trades. So if you spent all day since 7 o'clock this morning trading, taking tons of trades, and someone else takes, and you got careless at the end of the day and lost all your money, and someone takes 1 or 2 trades late in the day and makes a quick scalp, they did better than you. So looks like we're trying to break to the upside. And so far, the bulls are doing a good job. I want to see a strong close above 61 and 49. So right, just like that right there. Why did we sell off in the close of that bar? That is concerning to me. Now, I'm happy about this. I think this is good for the bulls and increases the odds of an upside breakout. But if I'm a bull and I'm buying the close at 56, I want the bar to race to the upside. And if we stall too long here, I didn't buy 56, but that would be my thoughts right now. If we stall too long around the close at 56, then I'd get out. So this is good for the bulls. It's really important to pay attention to how much the bar is pulling back. And you can do that in a few ways. You can look at a 1-minute chart, and you can look at it like this and kind of pay attention to the pullback. But the longer you look at charts, it's easier just to look at the 5-minute. So right now we've not pulled back that much, and that's good. And the reason that's good is if you're a bull and you're trying to enter on a pullback, you want the market to chase. You want traders to chase the market up, and just like that, this is becoming more and more disappointing. If I'm a bull, I don't want that. I don't want to be able to buy this close. The close is 59.50. Price went up to 60.50. It only went up 2 points. That's a problem. So if I'm a bull buying for a quick breakout, maybe I just say screw it and I take 1 point profit and wait for the breakout. So let's see, 59. This close is 59.5. Now we're at 62.5. So it looks like traders made 2 points actually. Now we're at 62.5. So it looks like traders made 2 points actually. So let's see what the bulls can do here. Probably strong enough breakout above 49 and 61 that the market will have at least a second leg up. Sometimes when you see this, you want to buy. Traders will look to enter on a pullback. Maybe look up the 1-minute chart, try to buy a few points below. But what you don't want to see is too much of a pullback. You want the market to pull back and then go back up. If it pulls back too much, that is a warning that more and more traders are scalping out, and that is not ideal. We're approaching bar 22, which will be a magnet for the bulls here. I think we'll get there. So what about this being 2 legs up in the trading range? Leg 1, pull back, leg 2? It very well could be. So a strong enough breakout, 66, 67, probably going at least a little bit higher. But tail on 67 will discourage some bulls and discourage some bulls from buying and encourage some to take profits up here. Still probably going to get to the close of bar 22 and possibly get above the 25 high and back to the bar 5 high up here. So for the bulls, they have a gap, the 65 high, 67 low here, so that's good for the bulls. So close to this target, I think we'll have to get to it. Notice how the open of this bar does not have a tail. So as soon as this bar opened, traders bought the close. That's good for the bulls. I just got out. When this bar started to go up, I looked at a 1-minute chart and actually bought the close of this bar. And if it would have sold off too much, I'd have gotten out break even. And my target was just, I think we will go higher. My target was just basically 1 or 2 ticks below the close of bar 22. I thought we'd at least touch it and turn down a little bit. And my actual risk was pretty small. Do I think we'll go up to here? I do. But, trading range day. And I'm a little suspicious. My other issue is 67 is a big bar and it's climactic. And whenever you have a climactic bar, especially when it's possibly 2 legs up, leg 1, pull back, leg 2, 2 legs up in the larger move, leg 1, pull back, leg 2, it increases the odds that the market may have to pull back first. So for me, also, I didn't like the hesitation. So breakout, then a pullback, breakout, pullback. It started to pull back too much. So is this more of bears selling, shorting up here, or bulls taking profits? A little bit of both. Some bears will sell to the close of this price level real quick, betting on a scalp. Bulls will take profits up there. What about buyers below 68? There probably are buyers below 68. So some traders will buy the close of this bar, buy a few points lower, betting on at least the second leg up. So buy the close, consecutive bull bars, probably buyers and at least a little bit higher. I've got to take care of something really quick and I'll be back. Should be back in about 20 minutes, maybe 30, worst case. Going into the close, strong enough breakout, probably going higher. It is by the close. Traders will buy, betting that the first reversal down will probably fail. So it's okay to buy here. Getting high in the range though, so if we start to go sideways, those traders will look to take profits. Okay, I'll be back in just a few. Thanks for being patient, everybody. Give me just a few seconds and I'll talk about this over here until the end of the day. Just need 1 second. All right, sorry about that, everybody. I'm trying to. One thing I had to do, I thought it would, of course, take 20 to 25 minutes at most, and of course, it takes almost a whole hour. So let's see here. Really interesting, I did not think we'd get all the way back to the open of the week, but clearly we did. And I want to kind of just back up and I'll do the end of the day. And let's see here. Feel free to ask some questions in the Discord or open the question box as well. So overall, my concern with 65, 66, 7, 68, I thought that the breakout was strong enough. I knew I had to step away for a minute. I thought it was reasonable to buy this close or buy the low of this bar. This was buy the close. So it's reasonable to be long, betting on a second leg up. So at this point, reasonable to buy the close. Here, it's possibly 2 legs up and a second leg trap. But with this much buying pressure, lots of open gaps, just look at the low of this bar, and it's actually a really strong breakout. I'm going to try and zoom in. Look at the tails below. There's like no tails. This is the biggest tail. So very good buying pressure. And some traders will buy the low of 69. I generally don't like to buy the low of strong bear bars. So I would try and probably buy the low of 68 and betting on a second leg. And you can see it went a little bit lower. Bears made money. This is a micro channel, but look at the micro channel. Yeah, if I bought 68, I'd just put a stop down here. I would have no intention of letting that stop get hit. That's the most important thing with wide stops. You just cannot let them get hit. So anyways, micro channel might get a small second leg, but this is basically a wedge. Sold off, pulled back, sold off, pulled back, sold off more, pulled back. So reasonable to buy in this area, but this is a concern. 3 consecutive 3-bar micro channel. Strong surprise, 72. Breaking above, so open gap is 72 by the close maybe, and then you get this. I don't know, that's a tough call. For me, I'd probably just get out below with it being later in the day, and you can see outside up and it's sold off up to here. So this was a warning though. When you get a bear bar, traders will get out. You'll have some bears that'll say, whatever, I'll just sell below and use the wide stop, and they'll scale in. Where do they scale in? Open of the week is one choice. Maybe they scale in as the market goes up and starts to turn down. So, interesting end of the day. We sold off bar 1 and 2, and you can see this was the start of the channel, and we went above it, turned down. So, on the weekly chart, the bears, they did the bare minimum. They got a bear bar closing below the open of the day, closed below the low of last week. So that is, it's disappointing for the bulls. Are bears going to sell on a stop below this bar? No. Will the market, what I think is going to happen next week? I think we'll probably go to the upside, but we could easily fall below the low this week before we do that. If we do fall below it, probably buyers below. Daily chart. Y trade section does not. So daily chart, we gapped up, sold off, and we managed to close above yesterday's high, so that's good for the bulls. Really overall, it was a trading range day within a trading range over the past few weeks on the daily chart, so no surprise there. And, when you look at the market, I think we're forming a trading range. And the reason for that is I'm starting to get more and more confused. Strong buying, and then we're starting to go sideways. The signal bars aren't great. Bears, they sold above this high. They made money. I think we're going to oscillate around 4,000. Do I think we'll go up to here? Probably. Do I think we'll have to sell off all the way down to here first? I don't know. I'm hesitant to I think we may have to sell off first, but we're in a trading range, big up, big down. So this might be a tight enough channel if this is a trend line break, and if that's the case, we sell off to here, form a double bottom, and then we rally. It's possible, the monthly chart, you've got to think about the possibility of the market getting down to here, which is, we get down to the 2020, the high, basically the start of the pandemic in 2020, we could easily do that. There's a trend line we could get down to. That's possible. And if we sold off, broke below this low, went sideways around here, maybe sideways in here, then that could do it. Maybe on a daily chart, maybe if we got a measure move, this is probably months away, but it's possible we get a measure move from this. Maybe we rally to the September 12th high, form double top, sell off. That would take you to 28.50, which would be somewhere in there. I mean, that would probably get you to the trend line. So basically, it probably looks something like that. Test up here, sell off, but who knows? Most people are obviously interested in what happened on the 5 minute today. So on the open, consecutive bear trend bars, whenever you get that, it's strong enough that it's a sell to close market, odds favor a second leg down. Is this the start of the second? Is this the second leg? Maybe, but typically traders should look for symmetry. So 2 bear bars, this is probably a pullback, and there's a better looking second leg. So I was looking at a question. Yeah, I'm not trying to be humble by saying I don't know what the market's going to do. But, really, it's, the person was saying thanks for being honest, not knowing, I guess, what I think the market's going to do on the higher time frames. And I really don't. And I think it's important to see the market as 50-50. Don't pretend that, I think one of the worst things people can do is be hard-headed about what they think is going to happen. If you think rationally, if you think logically about the market, Al says all the time, 40 to 60%. Best case, you're 60% right. Worst case, you're 40% right, which means probably sideways. One side. So back again. But yeah, where I was getting at is, if the market's 40 to 60%, you're going to be wrong at least 40% of the time. So on the open, consecutive bear bars, odds favor at least second leg down. So it's sell to close bar 1, sell to close bar 2. Can you sell? Is it better to wait for the second bear bar in bar 2? Probably. Generally, I like to wait for consecutive bear bars because it increases the odds that even if the market goes above this high, I can sell. What I typically will do in this case is sell to close, sell more, and be willing to sell more below a bear bar closing on flow if the market's not clearly reversing. But you have to use a wide stop and trade small. Bar 3, probably sellers above and at least a second leg down. So traders will sell to close at 2. They'll probably sell more above 2 or 3. But you need a wide stop. Bar 4, outside down. Is it sell to close bar 4? It might be. My biggest concern with bar 4 is it's second entry buy if we could go below 4 and turn back up. This ended the micro channel. So high probability of sellers above. I don't know about buyers if there's going to be that many sellers below though. And bar 5, a bull bar, IOI, second entry buy. Some bulls will buy it. Low probability, obvious target below the 47 high. So it might make more sense if you do buy it. Probably better if you can get out quickly. Tight enough bear channel, and we've only gone, maybe a point above a bar, so probably more sellers somewhere up here than buyers. And 6 almost went outside down, bear bar closing on its low, double top with 4. What do you do if you bought above 5? Probably get out below 4 or 5. 6 has a tail, so it's a swing short, betting on a downside breakout test of the 47 high. And that's what happened on 7. Is 7 a wedge? 3, 5, and 7? Might be. And some traders will sell to close. My concern is the tail below the bar, and it's at the moving average. So if you do sell to close, and the next bar is bull bar closing on its high, certainly closing somewhere up here, most traders should get out and take the loss. Bar 8 closed above the 7 low, so it's a warning. It's a micro channel, 3 consecutive 3-bar micro channel, probably sellers somewhere back in this area, but this is a warning that the market may go sideways here. And bar 9, breakout pullback short, 1, 2, 3, so 4 consecutive 4-bar micro channel, sellers above, open gap here. The bears want to measure move down, something like that. More likely this gap's going to close. Do you sell below 9? You can take it for a swing, but probably buyers below. 10, micro double bottom with 8, down, up, down, up. Bulls, do they buy above 10? Some might. My concern with buying above 10 is it's a doji, and it's somewhat an expanding triangle if you ignore this tail. And that means there's a lot of overlap. Overlap leads to trading range price action. So there might be more sellers in here. Bulls buying this low, scaling in, getting out, break even around here. Bar 12, almost outside up bar, big bar, increases the odds of sideways. And what about buying above bar 12? For a second entry buy, double bottom with 8. You can take it for a swing, but my concern is it's a one-tick doji, which means the risk is big. It's also testing the breakout point of bar 6. So bears, they sold below 6, sold off a good amount of points. Guess what they're going to do back up here? They're probably going to sell. Bulls bought the low 6, bought the low 5, scaled in lower. Guess what they're going to do? They're probably going to take profits up here. That means I think there's more sellers up here than buyers. You also had bulls that bought above 5 and bought more lower that are probably going to get out here. And lastly, if you think about it, the channel down to bar 8 is pretty tight. You know, you have not had two closes. You've not had two bars closing above their midpoints, closing, in other words, this bar closed under its midpoint, this bar closed above it. So where's consecutive bull bars closing above the prior high and above both their midpoints? 13, second entry short, maybe a wedge, below 9, 11, 13. Some traders can take it for a swing short, but I do not like the tail below and a lot of overlap. But some traders will take it betting on this gap staying open. And 14, trying to break above, trying to close this gap. At the moment, it's a negative gap, and there's probably buyers below. But my concern is we may have to have a second leg down from this. So leg 1, pull back, leg 2, before we go up. And then bar 18, trying to break above this wedge, 1, 2, 3. Bull bar, but a lot of overlap. So it's basically a trading range. So if you're buying above 18, you're taking a low probability swing, betting on an upside breakout. Not ideal. And 19, bad follow through. 17, bad follow through. Some traders bought the close at 16, tried to buy more lower, and when 17 turned up, they bought the close at 16, we're above it, bad follow through 17. Guess what they'll try and do on 18? They may try and get out break even, and the market didn't let them out. Showing a surprise, bar 18, probably going at least a little bit lower, and probably will have a second leg. It's possible it's a wedge. 1, 2, 3, or 4, 8, and 19. Consecutive bear bars, 18, 19, and 3-bar micro channel with 17. Sell to close, probably going at least a second leg down. But the problem is you're selling at the bottom of a lot of overlap, which means you're selling at the bottom of a trading range, potentially. And it's also at obvious targets, yesterday's close. 20, the bull inside bar, 4-bar bear micro channel, lowers the probability to sell, but it's a reasonable buy, betting on a wedge, 4, 8, and 20. So if a trader is taking it, and also you have traders that perhaps bought above 5, bought more above 20, may be interested in getting out break even. 20, 21, consecutive bull bars, probably going at least a little bit higher and back into this area. 22, a climactic bar. Now you have 3 consecutive bull bars closing above all these highs up here. It's a reasonable buy, but you have to be concerned this bar is bigger than the other bars. 23, probably buyers below and at least a second leg up. 24, it's an inside bar, possible double top. with, you can argue 14, 24. And then 25, we went to a new high and turned down. So you're starting to get a lot of tails and overlap. If you're buying at the top of the trading range, you have to be very careful. And the reason you have to be careful is your risk is big. If you're buying here, stop down here, you might be potentially buying at the top of the trading range. And if it is the top of the trading range, you don't want to get out at the bottom of the trading range. 26, bear bar. It's an expanding triangle, so you may get a low. So expanding triangle, 1, 2, 3, 2 legs, 1, 2, might test down to here. 26 is a surprise bar down. 27 might be a pullback to that surprise. Some bulls bought the low of 24, disappointed 26, and they may try and get out one second leg down. 28, 2 legs down, possible wedge. 23, 26, 28, testing the high of bar 20. Bulls will buy, trying to defend this stop entry above 20. With the channel down to 28 being tight, it lowers the probability of the buy. The other problem with bar 20 is actually reasonable to fade the high of bar 20 or sell the high of bar 19. The reason is it's a micro channel, so odds favored sideways. Wasn't ideal, but that was another reason for the market coming down to this area. And then 29, bull bar for the wedge, 24, 27, 29. It's an okay buy, but it's a micro channel, 5-bar micro channel, so there might be more sellers above. Probably better for the bulls to wait for some kind of micro double bottom. 3 consecutive bear bars, and then we get a surprise bar down. So you have to wonder, is 32 strong enough for a second leg? And if it is, then most traders will wait and see if 33 could be a bull bar. It's possibly 2 legs down. The tail on 32 could not close below 29, so that's good for the bulls. But it's a big enough bar and enough of a surprise, it may have trapped traders. You had some bulls that bought the low of 31, scaling in lower, they might be trapped. 33 is an inside bar, and then 34 led to the bear breakout. So what happened on 34? Is it a sell to close bar? It might be, but whenever you have an expanding triangle with a lot of trading range price action, usually the big bar, when you have a big bar such as 34, it might be a trap. It's kind of like bar 30. Bar 30 is a strong breakout yesterday. So you have a strong breakout bar on bar 30, sideways, probably going higher. But when you see this bar and you see this strong breakout, you have to wonder, is it climactic? And just look at the bar. It's much bigger than all the other bars. And when you get a bar that's bigger than all the other bars, it increases the odds of traders selling. They'll fade the bar, and they'll scale in higher. So maybe they sell more below 47 or 51, and the odds are the market will become a trading range. Same thing here. Went too far. 34 is a really big bar, and it's a dangerous bar because the odds are you're going to get a pullback. This one is more dangerous than buying 30. So why is that? It's more dangerous because it's late in the move. We had a trend from the open bar 1. Here, we did not have a trend from the open bar 1. We went more sideways. So sell off, sideways, sell off, 2 legs down. Leg 1, pull back, leg 2. That increases the odds that there might be buyers down here. So 34, 35, I'm suspicious. It's sell to close, but I'm very suspicious. I would not personally sell to close, especially when you have a credible buy like bar 20. Some traders, they buy above 20, they wait for a bull bar, and they buy more above it, betting that the market will get back to this high. 36, and that is a reminder that we're in trading range. Bulls, they bought the 19 low, scaled in lower. They're getting out around break even, maybe with a little bit of profit. And then you can see here, the market actually reached the 19 low here. 36, strong enough bull bar, probably going to get at least a small second leg up. Traders will buy the close, they'll buy more lower, betting that the market will have a second leg up. Bears, they sold the high of 35, scaled in higher during 36, so sold here, maybe sold more on the close, trying to get out break even. So the traders that sold above 35, they knew it was possible. They knew they might be selling too high or selling too low in the trading range. So when they took that sell and they saw 36, they were desperate to get out with as small of loss as possible, which is what happened here. Bulls know that, so they'll buy, and that's what caused the market to go up higher. And then 39, bear bar closing line flow, second entry, leg 1, pullback, leg 2. The micro channel since 36, bears trying to defend this gap here, the 19 low and the high of 38. If you take 38, if traders that are selling below 39, it's reasonable, but it's not ideal. Lots of buying pressure, probably low in the range. At a minimum, we're probably going up back up to this area. So the traders that are selling it are taking a chance we collapse sharply. So when 40 closes as a bear bar, such as that, a lot of traders will be disappointed and look to scalp out. 41, and that leads me to 34 and 35. Some traders will sell this close, sell more below 39 here. And when the entry bar does not raise strongly down, they become disappointed and they start taking profits back to their original entry. So 41 was a warning that the market may go sideways here more than instead of lower. Traders sold more, disappointed. So if you sold this close or this close, you sold more here. What are you thinking on the close of this bar? You're thinking, darn, I had my chance to get out break even in my original entry. I didn't take it. Maybe I should just take the small loss at whatever price I can before the market rallies. And that's what happened here. So the bears that didn't get out would probably get out above this bar. It's a second entry buy, double bottom of 36. And you can see on 43, the doji bar was fairly weak. And because of that, it's a weak bar, so it's a bad short below 43. The double top with 38 and 43, but context is bad. Low in a trading range, and the odd favor, an upside breakout of this flag, which is what happened on 44. 44 was a test of 20 right here. Bulls bought here, they bought more here, probably going to get out break even here. And you can see 45 is a warning. 44, strong bull bar, just like 42 has a strong bull bar. But look at the bar after 43. Look at the bar after 42 and the bar after 44. They're both dojis. So you get a bull bar and then a doji. Bull bar and then a doji. That's a warning that the market may go more sideways here than straight up. And 46, bears sold the high of 43, scaled it higher. They're making money. This is not ideal. Some traders sold below 39 here and sold more above 39 during 44. They're getting out break even on the entire trade right here. 46 went below 44 and reversed up. And 47, breakout pullback buy. So breakout 44, pullback buy on 47. The only problem with buying above this bar is, for one, the bar is big and it's 2 legs up in the trading range, and you're at a lot of resistance in this at the bottom portion of this trading range. So there might be more sellers up here than buyers. And 48, good bull bar. Strong enough bar, probably going higher. Strong enough bull bar 48, but 3 legs up, 1, 2, 3. So there might be more sellers up here than buyers. You're also at the 20 high, which has been a magnet all day. So there might be more sellers up here. And no surprise, 49 is a bad bull bar. So what are you noticing? We rally, we pull back. We break to the upside, pull back. We're breaking the upside now. What do you think is going to happen? We're going to pull back. 50 is a wedge, 1, 2, 3, at obvious resistance. Most traders get out below 50 and wait for a few legs down. 51 is a big bear bar. So consecutive bear bars, probably at least a second leg down, but you're low in a trading range. And whenever one side does something strong, you have to wonder if the market is going to have a second leg. Or whenever one side has something strong like this, in a lot of trading range price action, you have to wonder if they'll be disappointed. 52, 53, small dojis after this. That has to be a warning that something's not right for the bears. why was 50 and 51 strong, and then these two bars are really small? That's a warning. And then 54, 55, very strong reversal. Bulls bought the 49 low, scaled in lower, making money here. And that's very common. And that's why you have to be very careful whenever you see big bars at what could be the bottom of the range. You have to be very careful about selling too low or buying too high. Big bull bars, top of the range, have to be very careful. 56, consecutive bull bars, 3-bar micro channel from the 56 low, 54 low. Probably buyers blowing at least a second leg up. Some bears, instead of selling below 50, they waited for this, and they'll start selling right here. And those bears may scale in higher, betting that they'll still make money. So they'll sell at this entry price over here. They take the 50 low, and they sell over here. And you can see they probably scaled in. They would have made money at some point in here. Bulls, they'll buy this low, scale in lower. Some will scalp out, others will swing. And then at some point, they'll become disappointed. Strong enough breakout for a second leg. Well, this is one leg, 2 legs, 3 legs, so it's a wedge. Most traders would get out here. Some bears sold the high at 53, scaled in higher. Maybe they'd scale in a couple points higher, 3 or 4 points higher, or sell more below bear bar. In general, in a trading range, I'm willing to buy the first leg. I'm a lot less willing to buy the second or the third. So here, I'm not willing to sell this because I see this as the first leg, and this being the second, this probably being the third. Or I see it as 1 leg, pullback, 2 legs, pullback, 3 legs. 62 is a warning that we're probably going to go higher. And then 64, still trying to break lower. 65, 66, consecutive bull bars. And then you get this bar closing above all the bars to the left. It's a breakout of an extended flag. So bear breakout, pullback. This is technically a bear flag, and the bull's got an upside breakout. The other problem I forgot to mention was with this sell-off here, this is exhaustion. So some bulls will buy the close, use a stop and measure move down, and they'll take profits up here. The bears know that, so they have limit orders to short up here during 44, which is in part why the bar market sold off. And the bears have confidence to sell up here because this bar is weak. So you have signs of a trading range. Traders are willing to sell it, betting that the market will go sideways. So 3 consecutive bull bars, probably buy the close, and going to reach the high of 22. It's reasonable to buy 22. Some bulls buy it. They buy more above a bull bar here or here, and they just hold. And still buy the close, probably going higher. Bear bar, some bulls will get out. Other bulls will say this is strong enough that, yes, it could be 2 legs up, leg 1, pull back, leg 2, or leg 1, pull back, leg 2. Still probably buy the close and sideways at a minimum. 3 consecutive bear bars, micro channel, but the bodies are getting pretty small. So probably buyers somewhere below. Surprise bull bar, is it buy the close? Maybe, but you're in a trading range. I don't like to buy after the third leg, especially after the second leg in a trading range. Leg 1, pull back, leg 2, pull back, leg 3. Some traders will sell below this bar, scaling in higher, which is in part why this happened. You can see they were disappointed. They sold more up here, disappointed getting out break even. Some bears sold below 73, and they're scaling in. And guess what's going to happen? We're probably going to get back to the 73 low, even if we rally first. And that's in part why this bar happened. I would not take that trade this late in the day. There's too much risk of the market. You don't want to get trapped. It's reasonable. It's okay to buy, use wide stops, limit orders if there's time in the day to allow you to manage the trade. But if you run out of time, that's an issue. So since this was a reasonable sell, and this is probably a leg in a trading range, buying the close up here is not ideal either. For stop entries, reasonable to sell below 1, but big bar, big risk. And some traders will buy below 5, others sell below 6. I thought the best trade, some of the best trades were the longs. Buying above 20 was reasonable. I thought buying above 42, buying above 54, selling below 50 is reasonable, but that's a difficult trade. Almost an outside bar, lots of bull bars, difficult to manage, and then buying above any of these bars over here was good. For limit orders, probably the best limit order, selling above 3, buying below 9 if you're aggressive, and maybe selling above 28. Most traders would not sell above 29, but they might be willing to sell above 28. That's pretty aggressive. Buying below any of these lows over here is probably okay. Ideally, better to buy lower though, especially with this bar closing on a flow. Most traders would probably buy at the gap here. Some traders will buy below 45, but better if you can buy lower. And not really ideal to sell this low in the range. Probably okay to buy 56, betting on a second leg. If you buy below 69, I would not. I'd buy maybe 68 or lower if you can. Buy the close, sell the close 1 or 2. Maybe sell the close 7, but difficult to manage. Could be a wedge, and we could easily get up here. Sell the close 18, maybe, but pretty aggressive. And then buy the close 21, buy the close 22. Sell the close 34, but I talked about it. It's a big bear bar, so you have to be very quick to manage the trade. And not ideal. Too difficult, probably for most people to manage this correctly. Sell the close 51, but when you see this, you're disappointed. You have to be quick to get out. Buy the close 55, but again, management's key. You may just get a small second leg up and then go sideways. Buy the close probably 67, 68. That's okay. But late in the day, probably going to pull back soon. So better if you can scale in. And that's probably it. Always in trading, sell below 1 or 2, always in short. Bears get out above 5. And if they do, they sell again below 6. What do you do here? I'd get out above the bar 10. And hard to sell again, and then always in bulls buy again above 20. But if they do, they probably get out below 25. And bulls get long. I don't know. Some will get long above 28. And then if they do, they probably just get stopped out, or maybe they get out as this bar turns down. Bears, some will sell below 33. But if they do, they probably get out above this bull bar or above 42 at the minimum. And then bulls get in above 42. They get out probably below here, 50. Aggressive bears sell, but if the bears sell, they get out above 54, and the bulls buy above 54. And hard to hold long, but I guess if I had to do anything, I guess I'd be long after this, but hard to say. And then clearly always in long here, buy for any reason. The bull that gets out, maybe they get long on the way up, but that's pretty difficult. Whenever you get this, it increases the odds of getting this, so pretty challenging. I'll wait for a couple seconds for questions, and if there aren't any, I will end the webinar. Cool, I see one, Nick. And make sure it's easier if you guys tag me in the questions, because it notifies me that I have one on this Discord. Brad, if you bought above 42 as a high 2, if I bought above 42 as a high 2, okay, here, would those dojis make you move your stop to break even quicker? I'm assuming you're talking about the dojis, like right here. So I think, this brings up an interesting question. Or would you keep your stop below 42 or 36? I'd keep it below 42 or 36. Break even stops are really, I'm going to offend people. I think I question break even stops. Al would say, I get the logic. They make sense. People will use them. I know Al would argue that mathematically they're kind of dumb. And the reason they're kind of dumb is most of the time the market's in a trading range, which means most of the time you're going to get stopped out at break even. So you sell below this bar, maybe as the market goes your way here, you get stopped out break even only for the market to go lower. You sell below bar 6, you take part off, you move your stop to break even, look what happens. You basically get stopped out right here only for the market to have a second leg. So why is that happening? You buy above this bar, you get a rally, you move your stop to break even, you get stopped out, basically it's your entry and the market goes up. So why does that happen? Well, it's really simple. If you ask people like Ali Afshari, he takes those entries. So what he does is, instead of selling below this bar, whenever the follow-through happens, guess what he's doing? He's setting a limit order to sell at that theoretical break-even price, getting in, right where those traders are getting stopped out. Same thing down here. Rally, traders move the stop to break even, and the trader that waited could buy that exact same price later on. So in a trend, that works really well, where you can move your stop to break even, it won't get hit, but in a trading range, it does not work as well. So I hope that answers the question. So I'll wait a couple more seconds for questions, and then I'm going to hang up. For sure, Nick. I'm glad that was helpful. All right, looks like that is it for questions. Hope everyone has a great weekend.